Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys.
All right. Good morning, guys. Welcome back to another live stream. Let me center my camera a little bit here. And not just any live stream. Today you've got CPI. Also, let me double check that you can hear me. Looks like you can. I'm streaming from home every Wednesday. We work from home. It's a nice little way to break up the week. And I have just got so many things to do. Every once in a while, you just get absolutely overwhelmed with work stuff. I just, trading is still my passion and my love project, if you will. But there's a lot of stuff that goes behind these YouTube videos and all the software stuff. And my goodness, I swear, I still remember the days where it's just all fun and YouTube only, but it just everything seems to just get bigger and bigger when it comes to work stuff. Anyways, Nasdaq's up 1% today. That's pretty nice little bounce back. S&P 500 up 0.85%. However, this is all kind of under scrutiny in about 10 minutes. You have CPI, right? So inflation numbers come out, and that is going to either just completely help out this rally to get the ball rolling again, maybe, or it's going to kill all the fun. So here's the issue with CPI, right? The market is really looking to CPI to try and save the day. You have some problems in this situation, but I actually want to just go out and say, first of all, what's most on my mind right now is that yesterday I bought the dip pretty hard. I still have cash available, but I definitely went shopping yesterday. I bought a lot of stocks. I bought a lot of what I bought specifically is the IGV, which is an ETF that tracks a whole bunch of technology and software stocks. I bought it in the high 80s, and it's bounced back here a little bit. We'll see if it has any sort of follow through. But I actually bought this as this is kind of crazy, a weekly chart trade, not necessarily an investment, a weekly chart trade. I have a stop loss on this order. If this thing plummets, I'll get out. But this is a weekly chart level that looks so solid to me. I like software for the long term anyways. In terms of like long-term investments, that's typically my favorite place to invest is technology and software. Like everybody else, everybody loves technology, but it makes sense. Technology is where the growth is at, right? But technology has finally had a little bit of a breather, right? The software ETF, IGV, is down at one point here, 20% peak to trough. Could it get to 30, 40%? Sure, maybe it could. But I think that there's a good chance that a buy the dip kind of opportunity is in the process of happening. The NASDAQ, to me, may have a little bit more room to run to the downside if especially if inflation data comes in hot today. But I'm buying this dip, and I just want to make that clear because from my role here on YouTube, I know, my thumbnails and titles have been kind of chaotic here recently. But just so it's, black and white, I am buying this dip. I do have cash available, like I said, so I'm looking to buy the dip more if it keeps going down. But I actually think that we're getting close to a bottom here. And maybe that's famous last words, but some of the reasons I say that is that the VIX seems to have kind of gassed out here. We could still have one more flush event. Like if CPI is just terrible today, like if CPI is super hot today, maybe you just get this move and maybe that happens. My opinion on it is either we've already started to bottom for the stock market, or we're going to get another flush move, then bottom. I think that right now, everybody is sold. Everybody believes, oh no, now we're going into a recession, right? Recession fears peaked up massively here recently. So everybody thinks that, right? And when everybody thinks something in the markets, when everybody starts to believe something, a lot of times the market has a great ability to do the exact opposite of what everybody is kind of thinking. So yesterday, I also was looking at my YouTube comment section. So many people, and I'm not, if this is you, I'm not like trying to insult you or call you out, but I do want to encourage you to think about this. For my stock traders and investors and people who, have a long-term portfolio, I had a lot of people commenting on my channel just saying that they're out. They're selling. They're, liquidating stocks or getting out of the way. And a lot of people, getting all sorts of political about their investments too. This is Trump's fault, this, that, and the other. And look, you may believe one way or the other about your politics, but don't let political headlines and stuff that's going on completely get you to abandon your, long-term goals. I would just encourage people to don't let headlines and politics influence your long-term investment, first of all. But second of all, people, if you're selling your stocks and stuff now, maybe you're right. Maybe there is an opportunity to buy back lower. But that's what I realize is that's what gets people to sell their stocks at the worst possible times, is that they believe they can sell their stocks and get a better price later. That's the belief. That's what gets people in trouble. They're like, oh, I know the bottom is lower than this, so I'm going to sell now and I'll pick them back up later, right? But right now, in my view, now you're getting a dip. Now you're actually getting a discount. The time to buy was not over here, which is where a lot of people have been chasing stuff. In my opinion, if you like long-term stocks, the idea is to buy them when everybody's terrified. And I think you're getting into terrified situation. Now I'm going to get into some trading stuff. I know I'm talking a lot of stocks on my channel, and I'm trying not to do too much of that because I know a lot of people are more focused on, more short-term trading and gold and currency pairs as well. So I'm going to try and look at that as well. But I just have been talking about stocks a lot recently because they're attractive to me for possible buys. So I am most focused there right now. Anyways, what was I going to look at? So we have CPI here in a few minutes. Inflation data. Inflation data has been trending up here recently. The market wants to see that relax. If you get, and when I say the market, I'm talking about like the stock market, right? The NASDAQ, the S&P. Bulls would love to see cool inflation. Now, if you get cool inflation for the NASDAQ, what I think you want to see is a bullish confirmation would be good inflation data, meaning lower than expected, and a breakout to actually hold. What I think bulls really want to see from a technical perspective would be to recapture the lost 200-day moving average, right? For the S&P 500 and for the NASDAQ, we've lost the 200-day moving average, had a big flush down. I think bulls want to see a move like this, right? Absolutely what bulls do not want to see and what bears want to see would be either an inflation report that's okay and sellers take it back at these key levels of resistance, like if 5,700 straight up sells off again, bears are going to love that. They'll have a tea party with that. But if you just get straight up hot inflation today, I think down we go once more. Now, again, I don't know what CPI is going to be, so I can't tell you, oh, gold's gonna rip off, to new highs, or it's gonna crash lower. I can't tell you that, right? And everybody's gonna, you'll see comments all over YouTube or on the comment section, the chat section. People will be like, oh, sell gold is going down. Nobody knows what's going to happen with CPI here in the next few minutes, right? We don't know what the data is going to be. If a large number of people had that information right now, wouldn't the chart already be moving, right? Now, maybe there's some secretive, tiny, groups that have all the data ahead of time, and they profit off us meager peasants. But for the rest of us, we don't have that data ahead of times. I'll self-report. Drinking soda in the morning. It's 8:26 a.m. But look, I'm a trader. I'm already insane. So drinking soda in the morning shouldn't be too crazy. Too much crazier than being a trader. Also, I have to apologize. I'm going to be quick about this, but I genuinely mean this. If you watched my video yesterday, I watched it back and I really felt bad about something that I said. And at first, somebody commented yesterday and they were like, Nick, you talk to us Forex traders like we're idiots, like we've never heard of the VIX before. And I realized, at first I was like, no, I know a lot of Forex traders don't know about the VIX, but that's not like, I'm not saying Forex traders are dumb for not knowing about the VIX. It's just, you're not, it's more of an options traders thing to focus on. But in my video, I watched it back and I kind of felt like I went hard on Forex traders. Forex traders are I glorified like stock traders really hard in my video yesterday, and I kind of felt like I gaslit the Forex trading community. And I do want to just clarify, look, I am like through and through to my roots a Forex trader as well. So I'm so sorry if I hurt your feelings. No, but genuinely, I watched it back, and I watch back every single video that I post. And I watched it back and I was like, ooh, if I was a Forex trader, I would actually kind of be annoyed by that. So I'm sorry if I actually offended you. I know we're in the 21st century. Everybody's offended all the time, but I just didn't like the way I said it. If you're a Forex trader, I'm not insinuating that you just are dumb and don't know about the VIX. It's just that the VIX is kind of a nuanced thing. What I should have clarified is that, a lot of stock and options traders don't look at the dollar index when I think they should, right? My bigger message was that regardless of what you trade, I really think more traders would benefit from having a holistic view when they do their analysis. Like, my channel is not a Forex channel. My channel is not a stocks channel. My channel is not a gold channel. It's kind of a macro all markets channel. And I think that actually is, in a weird way, a niche that's really important. Like, most channels that I see, they focus really hard on one thing. Like, they focus really hard on Forex. They focus really hard on, stocks, whatever. I think that actually having a kind of like full markets view actually is kind of a cool thing that I focus on my channel. So I'm going to continue to do that. I think that, again, regardless of what you trade, I think it's a great thing to have an inclusive full market view. Okay, guys, we've got just about 30 seconds here before the news. I've got it pulled up. I'm going to go ahead and switch over here to take a look at the all markets view. Also, yes, it is diet soda. Okay, guys. So stocks leading higher into the print. Let's see if those gains are held here or lost. We're looking for, fingers crossed, a cool inflation data, but if we don't get it, buckle in. Breaking news. All right. Initial move is higher here. And not only is it higher, that's a rip higher off the initial jump. NASDAQ's up 1.5%, 1.8%. There we go. Let's take a look and see what the print was. Wow. 2.8, guys. That is excellent. 2.8%. Inflation cooling down. Very nice. That's going to be weak for the US dollar. That's great for stocks. Again, this gives the Fed more wiggle room to cut interest rates. So if all those tariff fears materialize and we do start to see some growth slow down, well, hey, you know what? The Fed can cut rates to help. That's what the market just said. That's my best guess. I'm trying to interpret the markets every day, but what it seems like we just saw is a very nice pop because look, 2.8% inflation, that gives the Fed, what does it give it? Ammunition. It says, oh, stagflation concerns, right? Maybe not. Because inflation cooling means that we've got just... Now, here's what we didn't want to see, right? We've talked about this a lot. Here's what we don't want to see. The economic growth is projected now. A lot of people are forecasting for slowdown, but a lot of people have been forecasting for inflation to go up. But today, if you only have one of these issues to deal with, that's a lot easier to deal with. The Fed can cut rates if inflation's cooling off. And that's what I think we just saw. So that looks great for stocks. And again, like I said, I yesterday, I really went shopping on a lot of stocks. I bought, we'll do stocks later. I've been doing a lot of stocks recently. Let's talk gold. Come back to this. This is nice for gold as well. Not a huge move here higher. I mean, on the 15-minute chart, it looks huge, but take a look at the hourly chart. You can see we're still kind of sitting up against this 4-hour chart level of resistance. From a 4-hour chart analysis perspective, gold sitting at resistance here. I'd love to see that break out today. There we go. And you also have, of course, the all-time high resistance as well. Bulls have been, I mean, it's just been a choppy week for gold. Gold's not really made too much of a substantial move in either direction. It continues to be my largest position in my portfolio. I am long GLD, which is an ETF that tracks gold. And I'm looking for this move. I'm looking for the breakout, the resumption of new highs. I think that could occur, especially with cooling inflation. This is a good print. Again, I'll go ahead and say this. I could, anything can happen, but I would actually be surprised if we didn't end higher today for gold. That looked really good. You have soft inflation data. Core CPI also came down. We'll take this. We'll take this all day long. That's excellent. Cool inflation should be good for gold, should be good for stocks. Now, I want to warn, this is good for gold and stocks because inflation data is cooling, dollar weak, right? And if you're wondering why the dollar didn't move a whole lot lower, well, the dollar's already been getting crushed. So I think the CPI just kind of confirmed, okay, yeah, we've had a massive sell-off in the dollar. Maybe we're not going to have a huge pop to the upside. That being said, while this data that just came out, guys, that's good for stocks, good for gold. The challenging thing of this market in 2025 is that we are in not only like a 24-hour news cycle, we're in like an hourly news cycle. Like there's something new in the markets all the time. And I think that, before you just jump to the conclusion of like, oh, good, stocks are just absolutely face ripping higher from here, you just have to be cautious because this market, again, the day's going along and then all of a sudden a message from Trump hits or Powell says something or Putin does something. Like this market is just so chaotic. CPI, I would say, is a great print. That's a great print. 2.8%. We love to see that. That's excellent. And I think that, you just have to be mindful that that's one thing in our favor for the bulls, for stock bulls, for gold bulls, right? We'll take that. But it's not the only thing, and there's so much stuff out there. So I just think you can't be binary in this market. You have to be very, very cautious, very patient with a lot of stuff. That being said, a CPI print like that looks excellent. For those of you who are in our VIP room, I'll tell you what I'm doing with gold. So I am looking for a pushback to those highs. So let me see if I can go to the daily chart, show trade. So here is the trade that I'm in. We're sitting at just shy of a 1-to-1 risk to reward currently. So I have my stop loss down here. We just looked at the 4-hour chart. We're kind of range bound. For my gold trade, what I'm looking for is we've come down to this support level. We held this nicely. We sort of put in an ugly higher low. What I need to do, or what I need to see in order to trail my stop loss, is to see price action do this. If we can push through those highs and close above the previous all-time high. If we see that, then I'm going to take my stop loss and I'm going to move it into profit at that time. So let's just say, for example, the scenario is this. Let's say that we get this kind of move in the next few days. Now, I'm a swing trader, so I'm not, rushing to make 15 trades a day or anything like that. Like I'm watching this. I'm saying, okay, I've got my gold trade. I like the fundamentals, right? Inflation data coming in today. Very nice. That will help the case for gold. Doesn't mean gold's going to go up guaranteed. It helps the case, I would say. So inflation cooling a little bit. If we get that move, right, at this point in time, what I would look to do would be to take this stop loss and move it up and just trail it behind this higher low, if that occurred. And then if we got another higher low at this time, I would look to take that stop loss and move it further into profit. So I don't use a strict take profit. I know I have a take profit kind of showing, or a like an order here on TradingView's tool, but in actuality, I do not have a take profit. I just trail stops. And the reason I do that is because I'm a fundamental trader. I focus mostly on macro. And so when I see, a chart trending up, I do focus on the technicals as well. But as long as the fundamentals continue to look really good and the technicals are kind of playing along, this is how I manage a position. So if gold can break away to the upside, I'll trail a stop further into profit. NASDAQ, let's take a look at the 5-minute chart just to see the post-news reaction. So you can see the big pop here initially, giving back a little bit of those gains. This market has been, here's the warning for the NASDAQ bulls. The warning has been, the pattern is not on our sides, okay? From a short-term trading perspective, bears are in full control here. I'll clarify again, if you are watching the daily chart, we discussed this just a little bit ago, the bears are in control in this chart. For bulls to take control, I really think you need to see a break back above this area here. But specifically, one of the key levels that I'm looking for is a retest and breakout above the 200-day moving average. So take a look at your 200-day moving average. This is a really key thing for a lot of equities traders, a lot of stock indices traders love to keep an eye on the 200-day. So if we get this move, right, what you do not want to see is you don't want to see sellers completely take over the rally, right? You don't want to see this. This would be worst case scenario, in my opinion, is you get the fade or you get the move up and then the fade sell again. We want to see, if you're a bull, you want to see this kind of recapture of this area, but then a breakout, a true break of structure here to the upside. If you get that, I'd say we're looking really good for a pushback to the highs. The market is so scared right now. And those are the types of opportunities where I think you can get excellent risk to reward in indices from a long-term investing perspective. But then even from a short-term trading perspective, if we start to see, hey, look, inflation data was pretty good. Jolt's job openings was pretty good. I've been cautious on indices, but at a 12, 13, 14% pullback in the NASDAQ, a little bit of glimmer of hope could really get this thing ripping back higher. So right now, I don't love the NAS, right? It's at a neutral reading on the Edge Finder from a short-term trading perspective, but I will be watching the technicals to see if they can start to recapture key levels of resistance. Gold is my favorite chart right now. The reason I love gold right now is because I have confirmation in multiple areas, okay? So as a trader, we never know what's going to happen. In fact, I've said this before. I've said this many times on my channel. One of the easiest ways to spot somebody who doesn't actually know what they're doing in the markets is if they speak in absolutes. So if somebody says, oh, I know gold is going to do this, or gold is definitely going to do this, or the NASDAQ is certainly going to do this. Like if there's any absolutes in somebody's vocabulary when talking about market analysis, there's a good chance they don't actually know what they're doing. And the other thing is if somebody claims they know what they're doing, certainly that's also dangerous, right? Trading is just very difficult. It's all educated guesswork. You never have certainty in the markets. And I think that's why most people struggle with it so much is it's not like when you go to work and you get paid and you go home. Trading is like you could go to work for 3 weeks and come home down $5,000 and still technically be doing what you're supposed to be doing. It's just in the long term, maybe you're up $20,000, but in the short run, for the next few weeks, you might be down 5, right? That's why trading is so psychologically difficult. Only Siths talk with absolutes. Like, that's exactly right? But in this case, it's losing traders, right? You don't speak in absolutes. Start training your brain to say, look, I never know. I'm making an educated guess. And when you start speaking an educated guess language, you become a Jedi, first of all. But second of all, you start to say, look, okay, if I'm making an educated guess about gold, I can't make a massive leveraged bet that gold is going to go up. I can't be foolish like that because I don't know with certainty. If you don't know with certainty, you can't make. That's why you see those traders blowing up. They're usually using a ton of leverage because they think they know with absolute certainty what's going to happen, and we never do. My educated guess right now is that a lot of stuff is pointing towards gold potentially being bullish. Same thing with silver. I like silver a lot too. I'm going to watch that. So I like gold, but why do I like gold? Well, seasonality wise, we know gold is likely to be in a good upswing part of the year. That has been very true so far. Check this out. We're on gold's seasonality month to month. January delivered. We had a huge up move in January as seasonality sort of forecasted. In February, it was a flat month for gold. So it kind of missed seasonality. In March so far, we are right on course. We are right on schedule to continue to see positive seasonality for gold. And guess what? April is also expected to be positive. So this is one reason that I continue to like gold to the upside. Now, what's cool about the Edge Finder is it doesn't look at one thing. It looks at a ton of things, right? So we can see Edge Finder's seasonality score is a +2. So seasonality checks off. But then we have all these other things. Inflation data coming in very nice today. Great stuff, right? That keeps the score bullish for gold here because, again, we've got inflation data, we've got seasonality. Retail sales were a little bit soft here recently. Manufacturing PMIs were a little bit soft. What we want to see for gold bullishness is a little bit of softness in the U.S. economic data, right? Because that would lead to the U.S. dollar weakening. And remember, U.S. dollar weakening most times, not always, but most times is a good thing for gold. There are unique moments where gold and the dollar can move in the same direction, but it's usually the case that a weaker dollar is stronger for gold and a stronger dollar is weaker for gold. So recently we've seen some economic data coming in a little bit soft. That has been a positive catalyst for metals, right? Same thing with silver. So today's CPI, definitely a good thing for gold and silver. Oh, look at silver. Silver looks so good. Silver looks excellent. If we see silver make this kind of move today, I am very interested in pullbacks and continuations. I love the momentum silver's got. It's got it. Momentum is moving back into silver. It looks great. Higher lows. Looks like it wants to break out here. That's a great looking chart. So when I look at silver and I look at gold, gold looks good too, but I would love to see gold would look great if it could take out those highs. But yeah, so gold and silver both looking excellent on the Edge Finder. Confirmations from seasonality. The commitment of traders data looks good for silver, especially. Gold, they sold a little bit this past week. Institutional positioning showed some kind of net selling on gold. Maybe that's maybe there's a little bit of selling going on in gold here right now. But you can see silver was a very, very big institutional buy in the last, several months. So we'll see. But institutional positioning looks pretty good for silver. Looks mixed for gold. On a long-term basis, institutional money is super long gold. You can see the long-term positioning for gold. Institutional money is very bullish. But yeah, we'll keep an eye on the short-term buys and sells as well. Anyways, like I said, if you're just joining, inflation data came in great here this morning. USD or US CPI numbers came in at 2.8% compared to the forecast at 2.9. That's down from the previous of 3% inflation. So inflation dialing it down here a little bit. And look, stocks love this. Metals like it. Dollar index is slightly green on the day, but really red in the last few weeks. I think CPI today, like I said earlier, maybe the reason you're not having a big fallout on the dollar is because the fallout has already kind of taken place, and CPI just confirmed it, right? CPI just sort of keeping it where it's at. So anyways, by the way, guys, if you are interested in seeing the trades that I'm taking, I am super busy right now with trades that I'm placing. I've got stocks that I'm looking to buy and options trades and Forex trades. I've got a little bit of everything going on. If you'd like to see the trades that I'm taking in real time, you can actually get notified of any position that I take inside of our Discord server. So let me pull this up really quick. So anytime I take a position, like for example, the gold trade that I took that I was talking about, anytime I take a trade, you can get notified when I take that position live if you're a member within our Discord server. If you'd like to join that, if you'd like to get access to the VIP service that we offer, the perk here is that, again, you get to see the trades that I'm taking. More importantly, you get to see why I'm taking them on a US live regulated brokerage account. And I find that important to mention because at the end of the day, there's a lot of services out there, people who just, they hype up what they're doing and they show you profit screenshots, but you don't even know if they're a live account and you don't know if they have any sort of long-term profitability to what they do. On our website, I've made it a point to make sure that we share transparent track records to what we do. You can see the trades that I'm taking in real time, but you can also see a record on our website, a1trading.com. So if you'd like to see the trades in real time, you can sign up. Currently, we are doing a huge discount for stream viewers. So we're doing 30% off right now. But if you send us a direct message while we are live streaming, you can get 35% off the group. Come join us, get access to the trades being shared and the journals that we're also sharing, which are much more important. You can see not only the trades we're taking, but why we're taking them and the breakdowns behind the analysis of each trade. If that's something that would benefit you, I highly recommend you take advantage of the 35% off discount while it is available. We do offer monthly subscriptions if that's easier for you, or you can sign up for our lifetime membership and just stick with us for good. I mean, we've had some people in our group have been here for years. So shout out to our long-term friends in the Discord. I highly, highly recommend that if you are serious about your trading and like the style of trading that we do on this channel, right? Fundamental analysis, sentiment analysis, and simple technical analysis, there is a home for you in the Discord. Come join us. Okay, so NASDAQ here up 1.5%. So yesterday I bought some stuff. I bought some stocks. I bought specifically, what did I buy? I bought some stock in Uber. So I need to actually update my list here. I'll update this with you guys here. Let me just sort this out. So what did I buy yesterday? Yes, I bought Fortinet as well. Fortinet. Okay, is that fully up to date? I believe it is. So I have been pretty aggressively shopping. I still have some cash. I still have and if you don't know what cash, what I'm referring to is within a stock brokerage, you fund the account, and it's not like Forex brokerages where you trade with like leverage or like lot sizes or anything. I'm just buying shares of stocks that I like. I also trade gold this way through the ETF GLD. So I trade stocks and ETFs. That's the primary stuff that I trade. So, so I bought a whole bunch of stuff in the last few days. I bought Google a little early. Amazon, I bought Nvidia. I have Tesla positioning. How's Tesla doing here this morning? Did it pop? Look at that, 6%. We'll take that. The pro and con, the double-edged sword of individual stocks, is that individual stocks move, especially like tech stuff, moves way more aggressively than the indices, right? So if you're trading a stock, especially something like Tesla or Nvidia, these things can move several percent in a singular day, especially in recent times where market volatility has been very, very high. So anyways, in terms of post CPI reaction, again, gold is pretty flat. Gold has been doing an excellent job at frustrating a lot of people just by going nowhere recently. Anybody else been watching gold and just been like, man, this thing is just super range bound? I know we have a lot of gold traders like myself in the room. Gold's just been really range bound. Again, I think that there could be an attempt at the highs here. I think that we have a good shot at seeing a breakout through these highs and a continuation. I think CPI really looks good. The only thing that would really mess this up, and I think part of the reason why gold is kind of choppy, is you have cooling economic data, you have inflation data coming in great for gold, right? Cooling off, Fed might cut rates. But then you have like possible resolutions in Eastern Europe, which basically takes away some of the gold bullishness, right? If you have peace talks, remember gold, unfortunately, thrives on wartime and uncertainty and things like that. That's not personally why I'm betting on gold. I like gold as an inverse dollar play, really. I mean, the US dollar has been weakening. This has been, a really big drop off for the US dollar recently. And gold and silver have benefited from that, right? So I like that play quite a bit. But the geopolitics, things like that, that's really hard to predict and not something that I try to predict, right? Where I can systematize it, if you will, the top setups algorithm, this is something that I can actually kind of quantify, rank and file / score, is economic data, technical readings, and sentiment data. I can actually kind of put together a game plan with this, but it's really hard to try and game plan around some tweet that was made by Donald Trump or something that Putin did or Zelensky did, or what did the German government do? Like, that is really hard to build a trade plan around. As a fundamentalist, I stick to the data that's rolling in. And one of the reasons that, I'm sticking with the way I do things is because, well, first of all, I've done it for a long time and it works for me. But number two is that a lot of people right now, like people are so terrified that we might be seeing economic slowdown. Like the economy, people on my video yesterday saying, haha, I knew we would go into a recession. We have not gone into a recession. Like there was several comments yesterday. And again, this is where I said, my comment section got like super, I don't engage in like talking about politics, but there was tons of comments about, so-and-so, this and that. They're sending us into a recession, this administration, whatever. There's always that, but it's especially when you have someone as controversial as Trump, right? People get really all sort of up in arms about it. But we are not in a recession. And again, we might go into one, but we are not in one right now. Let's be clear about the situation and why I bought stocks. Right now, if we take a look at the U.S. economic heat map, are we going into a recession based on this? I would say the answer is no. Like the answer is no. Could we go into a recession in the future? Yes, we could. But people have like decided somehow that we are going into a recession, and it's somehow a known fact. Like that seems to be the crowd sentiment. So if I could take a look at something, I want to show you guys the put to call ratio. I've talked about it all the time. The put to call ratio has exploded higher, right? People are scared. People are concerned, and people are assuming now that, all the tariffs, they're going to send us into a recession. Look, I'm not saying, I am not a genius that knows for sure if we are or not going into a recession. So let me phrase this as best I can, because this is really important. You might think that certain policies being put into place could seriously hurt economic growth. And you would be fair to take a look at 2018 and say, well, the tariffs that got put in place in there caused some growth slowdown. There is some good examples of that in 2018. China and the U.S. trade war stuff. Take a look at the stock market. It was down 20% at one point. Markets got terrified, and we didn't enter into a recession, but we did see economic slowdown. But what largely happens in markets, and this is the phenomenon that I want to talk about, right? Everybody gets so scared and they assume the worst, right? This is what has, in my experience, been some of the best ways that I've made money in the markets over the years. When people get so scared and so convinced, oh my gosh, Trump's going to crash the whole market, right? That's what people are thinking. A lot of young people, even, I saw this whole thing on Reddit. A lot of people are selling their stocks. They're selling into their 401ks right now because they are convinced that Trump is going to crash the stock market. And again, this has nothing to do with Trump. If you could take Trump out of it, it's more about whether, fill in the blank, this reason is going to crash the market. It's all over. It comes around every few years or every 6 months even. Something comes along. Oh my gosh, this is going to crash the market. I'm sure of it. It's going to go into a recession. And it might. The point is, it might. What is happening might crash the market. But most of the time, and that's, as a trader, keyword is educated guessing. Most of the time, people overstate what actually happens in markets. People get more scared than what their extreme fears. What actually happens is usually not as feared, is not as bad as feared. Okay. That to me is one of the key core things in markets that have allowed me over the time that I've been doing this to make great money in the markets, quote unquote, by the fear, right? The idea is when everybody is absolutely petrified of convinced, everyone is convinced. You know how I know this? Because what I just showed you, the put to call ratio and the VIX, right? The VIX exploding higher. This is the market saying, oh my gosh, we're going into a recession, and having a little mini freak out. The markets are emotional. So when you have everyone get super emotional about what's going to happen next in the markets, could they be right? Yes, they could be right. I'm not saying that a recession is certainly not going to happen. That is not what I'm saying. I'm saying all the speculators getting absolutely terrified and calling a recession, they're the ones making the irrational conclusion that we are certainly, remember what we talked about earlier, they are saying we are certainly doing this. They're saying this is going to happen. I think that the risk to reward in that environment becomes very attractive, because maybe we do go into a recession and maybe I'm wrong for buying stocks. But if I buy stocks and as usual, we see, well, okay, if those fears are not realized as badly as people think they are, I'll make a lot of money, right? That's the idea. I could be wrong. I could lose money on buying stocks right now. But most people thinking one thing, the risk to reward gets really tilted. Does that make sense? I just went on a whole rant about sentiment and why I find it to be a very powerful indicator, and why I've built so many tools around sentiment. It's because it's helped me make some good money in the markets over the years. When everybody gets terrified and one side of the boat, you can find some really constructive risk to reward opportunities. I hope that makes sense, but you never know with certainty what the market's going to do. But when risk to reward gets really skewed and you have the risk management and patience to set yourself up for success, that's where I've done the best in markets over the years. So yeah, that's what I'm watching. VIX exploding higher. I sold a whole bunch of puts recently. Some of them I sold too early, so I'm not going to say I played this perfectly, but I continue to like gold, which I think thrives in the uncertainty, which I don't necessarily think uncertainty is going away anytime soon, which is why I want to stay in my gold position. But if we completely flop on gold, I'm going to just take a stop out on that. Why is dollar index going up today? I would say that I know from a short-term trader's perspective, like if you're looking at this, you're like, oh, dollar's going up. But I would just say it's just noise, because at the end of the day, CPI coming in soft. I would say that just kind of confirmed where the dollar is, right? Dollar's been really oversold. I think for CPI to take this thing dramatically lower, you would have had to have just a chaotic, you have to one up, right? But sentiment already has been super bearish on the dollar. People really scared about the dollar. So I think that, CPI today behind us, there's just a little bit of, okay, consolidation. I hope that kind of answered the question, but basically CPI was soft, right? It was cool. It's cool data. But the dollar had already kind of sold off dramatically before then. So I think CPI kind of just confirmed where it's at. It validated its level. Good afternoon. The heat maps are fire. Thank you guys so much for all the free updates to the Edge Finder. Tom, you're very welcome. Thank you for your kind words. I really appreciate that sentiment whenever we build new features. I'll just say as we work on these tools all the time, it really makes our day when we get those types of comments. Like, I can't tell you how cool it is to me that, I've been doing this for years, building tools. I load up the Edge Finder and I see a bunch of people using it, and we have questions about the Edge Finder, and we have people who are like, oh, I love this new feature, or like, I use this feature every day. Man, that is just the coolest feeling. I can't explain it. I am not a famous songwriter by any means, but I imagine that it's like the feeling like when you write a song and the whole crowd is singing your song. I imagine that's probably one of the coolest feelings ever. That's like the closest thing I'm going to get to with that is the Edge Finder. When people are using it and exploring it and using certain tools to better their trading, that's got to be one of the coolest, feelings ever. Alan, no, you did not. Did you really? If you did, you're crazy. You beat me to getting an A1 tattoo. So we'll see. But yeah, dollar index bouncing a little bit here. NASDAQ
1.65%. I mean, the thing is here, this is a nice bounce back from the lows. From a technicals perspective, however, the thing we've been talking about, I know I keep repeating myself, but I just want to keep an eye on this. A breakout above the 200-day moving average, that would be the bare minimum for me to say, okay, we're bullish, right? Long term, I'm buying stocks. Short term, I'm not. Short term, I'm not like day trading or swing trading the NASDAQ. For me to swing trade the NASDAQ and actually straight up take a buy position, like on a short term basis, I'd be looking at something like this. This is what I'm looking for. I don't necessarily, from a trading perspective, I do not try and call the bottom. Alan, yeah, I would encourage you not to get an A1 trading tattoo. That would be really cool, but yeah, I don't know that your girlfriend would love that. She'd probably be hunting me down. Anyways, yeah, NASDAQ, this is what I'd be looking for. That 200-day moving average. Give me the break and close above. You know, this is interesting. You see this happen so much. The 200-day moving average is so psychological. You can see here we tested it beautifully, bounced right off. But a lot of times what you have is you have the break, the false break below the 200-day moving average, right? And then a retest of it. The question is, does it break back above or do we fail out and continue lower? I mean, look at the 200-day moving average in 2022. Broke below, plummeted lower, retested, failed out. Retested again, failed out. 200-day moving average is so key on indices. But sometimes you get like the false break. Like here's what happened in 2020. The big push below came back up. This was the make or break moment, and it made it, right? We ripped through that 200-day moving average and just proceeded to go higher. Fed was printing a bajillion bucks, and to this day, this was the best trade of my life. Was I actually on the breakout of that 200-day moving average, I went heavy on Tesla stock because when the Fed started printing money like crazy in 2020, I made one of my biggest career trades, which was just, okay, Fed's printing like crazy. Economy is still holding up okay. Yes, we might go into, but economy was good going into 2020. So anyways, we can talk more about that in the future, but it's a nostalgic trade for me, the Tesla trade. Anyways, hello, Nick. Oh, wow. Thank you very much for the 100 rupees. I really appreciate that. Hope you're doing well. Can you please give us an insight about the yen? I have been bullish on yen, but it's been selling off kind of aggressively. Yes, absolutely. Let's take a look at the yen. I'm going to pull up here really quick. Interestingly, yields are actually higher today. So if I take a look at the yen, dollar yen, up here today, I have a Swiss yen short position as well, which has been kind of frustrating, to be honest. I'm still in it. I think it's pretty much flat. Just tattooed the edge finder on my forehead. Very nice. You tattooed the entire edge finder, all of its features on your forehead. That would be a crazy tattoo. Swiss yen, and yen pairs in general. What are my thoughts on them? Well, if I take a look at the Japanese economic heat map, what do we have here? Well, inflation data in Japan is still pretty high, 4%. PPI also. And if we take a look at, this seems like a crazy miss. Is that actually true? There's no way. Hold on. We are going to need to check this out. Okay, yeah, sorry, ignore that. I'm going to write that down right now for devs to look at. JP. Oh, I think I know what happened.
we're building these economic heat maps when we're adding new features. I think we added in a US thing here or something. We added some PCE. Anyways, ignoring that for a second, unemployment rate in Japan, employment's pretty solid. Inflation, pretty hot. Services PMI, higher than expected. So when I look at Japan overall, I believe we're still getting several yen pair readings. Let's do this. Minor currency pairs, major currency pairs. Kiwi yen. You can see it's really fallen off. Dollar yen, Aussie yen. So you still have some yen pairs in here, but it is not. You can see Swiss yen is no longer on the list. So you have Aussie yen, dollar yen, Kiwi yen. So there are some pairs. Like if we go take a look at Aussie yen, like this one still looks very bearish, but we've lost some of the kind of conviction on the edge finder. So if I'm looking at yen pairs, right? Euro yen, pound yen and euro yen look actually pretty strong. The euro and the pound have been kicking butt here recently. However, then you go into like CAD yen, Aussie yen. These are in downtrends. Kiwi yen, these are pretty solid downtrends. So for me, these pairs look likely to continue lower. Especially Kiwi yen coming up to a level of resistance. If you're a bull on these things, if you start to see this kind of movement, then that nullifies the bearish trend idea. But right now, I still think that there's downside. The other thing I would point to for confirmation of some bullishness for yen pairs here recently has been the Japanese yen accumulation that we've seen on the COT data. Check this out. Look at this. COT data shows huge accumulation, but remember that institutional money they're not day trading. Well, I mean, maybe some of them are, but a lot of the positioning here is much longer term in nature. So you have accumulation of the yen, but man, they could be patient, right? The accumulation of the Japanese yen has really been starting since last summer, right? There's been a big accumulation of yen ever since that August 5th meltdown, the carry trade fears. The yen has been getting accumulated by institutional money. So it may be coming, but again, trying to time that from a short-term trader's perspective is the difficulty. That's the pro and con of the institutional reporting that we do in the Edge Finder. The commitment of traders data is great, but you also have to take it with a grain of salt simply because it is a bit more longer term in nature. So, yen bullishness this year, I'm still sticking with that idea. But today's CPI report, it just kind of shows let me go look at dollar yen again really quick. You can see the reaction to CPI here for the dollar was kind of opposite to a degree. You have dollar yen up, dollar up 0.25% today. Gold is pretty unmoved on CPI. Bitcoin up 1%. Like you can see euros slightly lower today. It's hitting a key level of resistance, but Euro looks really strong right now. In fact, I think it's a top setup right now. Yeah, look at this. Pound US dollar, very bullish. Where's euro dollar? Euro dollar bullish. So if you get a pullback on these things, I actually think that's a good possible long opportunity for my own trading. If I can get a pullback like the pound US dollar with a +10 score on the Edge Finder, COT data looks good for pound US dollar. Pull back into this area. That is definitely top of list for me right now. The technicals look great. for pound US dollar, right? You've had a key breakout of resistance. If we can pull back into that area, I really like the pound for longs. In terms of currencies right now, the pound looks like number one. What is behind all that bullishness? Let's go look. Forex. Let's take a look at, here's the euro, but I want to switch over and take a look at the pound. Okay. So almost everything goes in favor of the pound at this time. In the last week, institutional money had a huge shift bullish towards pound and bearish on dollar. That's where you're getting this +2. Is the latest weekly shift has been very bullish towards the pound and very bearish for the dollar. So institutional money in recent times seems to be selling dollar, buying pound. Retail traders are aggressively betting against the pound US dollar, which gives us a contrarian bullish signal. So the reason the score went up for that is because, again, retail traders who unfortunately and consistently lose money, they're betting against the pound. So that gives us a positive reading. So sentiment looks very, very attractive for the pound US dollar. Institutions are long or accumulating pound recently. Retail is shorting it. Seasonality goes against us. This is historically a negative month for the pound against the US dollar. Trend is to the upside. That's pretty clear. GDP numbers favor UK. Manufacturing PMIs favor UK. Services favor US. Retail sales favor UK. Employment data, unemployment. So overall, and for those of you who are Forex guys, under the Edgefinder scanners, you can pull up Forex scanner. And you can kind of understand the score a little bit better just by going through this page. But, you can look at country A versus country B. We can compare economic growth metrics, etc. So overall, Edgefinder, I really like the score. I like the setup for pound US dollar. So if you get a pullback into support, it might be a trade setup for me. Just gonna wait patiently for it. There's no rush for me. I'm a swing trader, so I'm looking for that longer term pullback or the higher time frame pullback, right? A daily chart, couple days down, then I like that setup quite a bit. So we'll see. We will see. Two major data points can't move gold past 29.30. I think 3,000 is BS for now. Well, gold is just consolidating, man. It is really, really choppy here recently, and that does not mean bullish or bearish, right? Sometimes people like to read way into consolidation. The market's just not going anywhere at this time. CPI, I would have guessed, I would agree with you. I would have guessed CPI would have gotten this thing to move a little bit more. But there's a lot of forces at play with gold right now. You have, again, CPI, a little bit cool. Jobs data on Friday, which I assume is the other major data point that you're referring to. It was a little soft, but it wasn't like a treacherous, terrible jobs data soft either. We slightly missed expectations, but it was still pretty good jobs growth. So it's kind of mixed. CPI today, I would actually say, is the bigger one that I'm like, wow, I'm surprised that didn't get gold to break out. But you can't get frustrated. I've seen people get frustrated. They're like, gold just needs to make a move. I'm so annoyed by this. And it's understandable. Range-bound markets can be really frustrating, especially if you're like trying to catch breakouts and then you're getting stopped out, right? That is frustrating. But sometimes markets just range. You got to wait. I trade a lot of different things for this very reason, because I don't like to sit around and wait for, like, I have my gold long on there, and if it works out, great, but I'm willing to sit through consolidation because I've got other things that I'm doing too and watching, right? And other charts, other things that I'm keeping an eye on. I still think we could break out here, but it might take some time, right? We've been sitting range bound for several days. Might go for several more days before making a decision.
I'm fine with continuing to hold gold as long as we hold support. If we don't hold support, I'm just going to stop out. Right? I'll take the loss and move on. But we could sit sideways for a little bit, punch lower, punch higher, and then finally make the move. And I'm just willing to chill and wait. Will you not set it to break even? No, I don't usually set my stop loss at break even because we could totally retest this support area. And that doesn't mean I don't want to get out if we retest support, right? We haven't really, if we break something like this, like if we see this move, then yes, I'd like to lock something in on the trade. But we have not really moved anywhere for gold in the last week, really. What do you think about the NASDAQ opening at 9:30? I guess we'll see the market's kind of open reaction to CPI in about 10 minutes. But we'll see. Again, this market is very, very sell the rips right now. So, you know, we could see the opening bell get sold into. But I'm not short-term trading NASDAQ at this time. I think long-term, if it keeps going lower, I'd actually love that. I could get more shares of stuff that I like on sale. Short-term, though, chart looks pretty ugly. A lot of key levels of support. You have to think about this, like from a technicals perspective, key levels just breaking, right? That is usually signs that bears are in control and will likely to continue to have control until we reverse and start doing the opposite, right? So these levels, these same levels, we want to see this breakout, hold, breakout, hold. As a price action trader, right, I'm looking to see this kind of behavior and join it, not assume that that kind of behavior is going to start, right? Because it might not. We might see, like they pointed out in the chat, 9:30 open, sellers rush in, push this thing back down through the lows. Maybe we're heading back to 18,400 for NAS 100 and maybe 5,400 for S&P. I had someone in my comment section say yesterday, they think that the S&P 500 is going to 4,000, which would be way down here. Could it happen? I mean, maybe, but that would be one of the ugliest sell-offs that we've seen in a very long time. Could it happen? Sure. Do I think it will happen? I do not. I think that, okay, you're looking at the S&P 500. What's normal? What's a normal pullback for the stock market? Normal, I'd say, is like 5-10%. That's like correction territory is 10%. Very normal. So in the S&P 500, we've just barely hit about a 10% pullback. We've found a little bit of buying. Let's see if it follows through. I think inflation data was great today. I think that could help the story. It's not the only thing that we need, I think, to get our move back to the highs. You need to see tariff stuff calm down a little bit. You need to see, de-escalation on the Ukraine, US, Russia stuff. There's some real, world geopolitics that need to kind of, the clouds need to roll away, I think, for you to get new highs. But from an economic data perspective, jobs data, okay. But then CPI was good, as a good progress report on inflation. So I think we're seeing a pretty normal response to good inflation data. But I mean, from a sell-offs perspective, for the S&P 500, 10% is very normal, very, very normal. Crash, quote unquote, is at 20%. So regardless of my chaotic, very clickable titles and thumbnails, forgive me as I am a YouTuber, we're not at a crash level. We're probably more at risk of a crash, quote unquote, than we have been in quite a while. But a 20% sell-off is considered, quote unquote, crash or a bear market, right? A bear market starts at a 20% drawdown, peak to trough. So we are like halfway to what a quote unquote bear market or a quote unquote crash would be, right? I personally don't think that we're on the brink of a recession, like so much of the news headline cycle will tell you. News headline cycle will tell you it's all over. It's, end of days. Stock market wiped out $1 trillion billion today. Sentiment is really negative. But I think we might just be in an uptrend, and we might just be bottoming out here, or maybe we go back and test a little bit further. And from a long-term perspective, I would be buying that dip the whole way down. Not aggressively, not with leverage and not being silly about it, but for the cash that I've been sitting on the sidelines, I'm starting to use it now. I'm starting to buy stuff that I like on sale. But could it happen? Sure, it could. Anything can happen in markets. That's why markets are chaotic. But, long term, I think in 2022, we saw the 200-week moving average get tagged at a peak to trough drawdown. The most recent example of a bear market, we saw 27.55%. This was when the Fed was hiking rates aggressively, inflation was out of control, and things were really, really bad. I'm going to say, for the record, I don't think that is the scenario right now. I think that there's a lot of politically charged worries out there. And again, I'm not saying that as a, I'm just saying that like a lot of people are seemingly very, very much trading, investing with their politics. And I would encourage you not to do that, because I put out a tweet the other day. It's not about if you like or dislike the current administration. It's not about that. Under Biden, the markets went up a ton. Under Trump 1.0, the markets went up a ton. Markets don't go simply binary up or binary down based on if the person you like or dislike is in the White House. And if you trade and invest like that, this is not for you, because you're super emotional in that state, right? You have to be able to separate your personal political beliefs from your trading approach. You can't really, in my opinion, there's going to be a lot of trouble if you're trying to make your investment and trading decisions based on if you are disgruntled or thrilled about who's in the White House. I think that's a really bad idea. Again, it doesn't matter if you like or dislike, like trade what's in front of us. And for me right now, the shift has been in the first part of the year. Part of the reason I missed, thankfully, a lot of the stock market sell-off, because a lot of the data has been showing that stocks were not the same kind of risk to reward profile that were there in 2024. And again, it's not political. It's simply systematic, right? So at the turn of the year, all of this was blue. And I was super bullish and long stocks and Bitcoin. I really flipped the script when this data started turning. Now, I've missed out on big moves. I've been early to moves. I've stopped out on a bunch of stuff. So I'm not here just patting myself on the back saying I always get it right, because I don't. But again, remove your politics and stay systematic. It is so critical in a year like this. I'm telling you, there's going to be a lot of people who make up their minds that the market has to crash because they don't like Trump. And people did it in Biden too, and it was infuriating, right? They're like, oh, Biden's going to crash the market. Inflation's going to go to the moon and stocks are going to go to zero. People did that too. Don't be one of those people, because that is not how you trade and invest. You can't trade with your heart and your emotions, right? You have to trade with your brain, with your back-tested systems and strategies. Has nothing to do with if you like or dislike who's in the White House. It's just amazing that I have to spend a lot of time doing that, because I see that comment all over my channel. People are like, and people are doing it with Biden too. So it's really not It is bipartisan foolishness on both sides of people saying, so-and-so's in the White House, they're going to crash it. I'm shorting stocks. Stupid. Don't do that. Trade with your brain, not with your emotions and politics. So what do I look at then? Well, we look at the data as it's coming in. I think maybe people are so lost on that subject because they don't have the data in front of them. They're just trading what they see on the headlines. Oh my gosh, Trump's going to crash the market. Oh my gosh, Biden's going to crash the market. Like that's what they're trading off of. And we can't be doing that. We have to look at the data. So when we look at the data, what does it tell us? Well, it tells us that PMIs, which are an outlook of forward-looking economic reads, are showing that in the services world and manufacturing world, key hiring people who make decisions at these major companies all throughout the country, on average, see more growth ahead for the services and manufacturing part of the economy. Okay, that's a check for the bullishness, but it missed expectations last time around for manufacturing. It beat them for services. So we're kind of like mixed right there. Retail sales have been slowing. The consumer has been a little bit more burdened recently. Inflation is hot, right? PCE is okay compared to forecast. Wage growth still positive. Unemployment rate still in a really good spot. Jobless claims last week were great. Still solid. JOLTS job openings were pretty good. ADP, not so good. NFP, not great. Not horrible, not great. So when I look at this, GDP growth came in as expected, 2.3%. What's the summary? Well, the summary is it's kind of mixed. I can't give you like U.S. economy is falling apart, like the headlines will tell you, or the economy is better than ever, like Trump will tell you, right? I think it's somewhere in the middle. And I think I'm just sticking with the data, right? The data is what guides my trading, not the headlines, not my emotions, right? That's what we have to get past as traders. I don't know. I feel like the silent majority are all on the same page with this. They're like, yeah, okay, get it. Whether you like or dislike Trump, whether you like or dislike Biden, you can't trade based on that. That's not a sustainable approach. I'm just curious. I don't know if I'm speaking into a crowd that completely is like angry at me right now or agrees with me. If you agree with the rant that I just went on for the last 5 minutes, could you do me a favor and type yes in the chat? And if you disagree with me, if you're like, nope, you're wrong, Trump's going to crash the market, so-and-so, whatever, type no in the chat. I want to see the sentiment. I'm just curious if you're on the same page with me about this or not. I think it's really important. I've said it many times on my channel recently. Leave your politics at the door. Otherwise, you're going to blow your account this year. Because you know what? And it doesn't matter which side of the aisle. You might say, no, Trump's going to save the day and the world's going to be the best it's ever been. And you might go all in on stocks. And when they go down for a couple months, you're just destroyed. Or you might say, no, Trump's going to ruin the whole thing and I'm going to short stocks. And then they rip and you're destroyed, right? So don't let your politics make your trading decisions. Okay, cool. Lots of positive sentiment. There's a couple no's in there. Totally respect it. Again, you might think maybe you have a political bias that's very strong and you have your reasons and you do your thing. But it does seem like the majority of people are on the same page. Let's trade the data, not our politics. Okay, guys, up next, we got Forex James taking over the show. It was a really fun hour and 15 that we just did here. Just a reminder, if you're interested in getting access to our VIP signals, you can get access to all of the trades that I'm taking in real time, sent directly to your phone and desktop. If that's something you're interested in, click the link being dropped in the chat right now. You can speak directly to our support team. The reason I say that is because if you do that, we'll give you 35% off today. So don't miss the opportunity. Come join our signals room. You can get access to every trade we're taking with full breakdowns and analysis behind every trade. Up next, we got Forex James taking over the show. Stay tuned. We will be right back. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey guys, how is everyone doing? I need to put my glasses on. There we go. Cool. Hope everyone's well. Hope you're all having a good middle of the week. Tom, hello. Good to see you. Bashi, I'm definitely not jealous, buddy. Don't worry. Kaidas, hello. Royal Trades, unfortunately not, actually. Just having some technical difficulties for some reason. My normal camera isn't connecting, so got to do this face-on camera. Sound like AI? No, the mic's normal. I don't know. Is it the mic or is it just me? I barely got any sleep last night, so I'm a little bit out of it today. US 30, is it going down? I don't know. Is the chart going down? Yeah. I was saying in my Telegram today that I just don't think CPI is going to be enough to keep stocks up or to prevent the downfall. So on the S&P, I'm looking at something quite specific. Now, this might be overly pessimistic. I don't know. Make of it what you will. There we go. Okay. So on the weekly, we've got this really, really nice level through here that would provide a very strong break and retest pattern. We're very deviated, or we have been very deviated from the weekly 200 moving average, which is this blue line. Historically, it's very normal for us to touch and then what's the word I'm looking for? Rally up or deviate, whatever you want to say is fine. And then we have a reversion back to the 200. Same thing happened here. Obviously, that was COVID, but it still happened. Rally up, reversion, rally up. Are we now ready for another reversion on the weekly time frame? Maybe. Who knows? But it's something I'm paying attention to. I'm not going to, I don't want to sit here and be a super bear or doomsday guy, but, I'm just reacting off what I see. And right now, I don't see much I want to trade on the S&P or the US markets in general. Anything on Swiss yen, Euro Swiss? Not really. I took Euro Swiss longs, was it yesterday or Monday? Just took 1%. It wasn't anything too crazy. So I'd like to get back into this market at some point. I'm just waiting for a pullback off the previous high. We've got a pretty nice double top here. So yeah, I'm just waiting to see if we can get some sort of downside, and then again, I'll be entering again to the long side. Swiss yen is tricky actually, because technically the yen seems quite overbought. So it's not a huge shock that we're seeing some of the yen pairs have pullbacks today. Generally speaking, I'm still very happy with yen longs. I don't see any issue there. It's more a case of just sitting through some of the noise and just letting the markets do what they need to do. I've got no concerns. I might get stopped out. If so, I'll enter again. No problem. James, opening your Discord for me for free of charge. Nope. USD CAD. Yeah. I think USD CAD overall, I would say long, just because I don't see Canada coming out of this trade war on top. However, I'm not sure I would really want to buy the dollar either. So I'm kind of just sat on the sidelines with dollar CAD. In fact, all of the dollar pairs, even if I'm bullish on it like I am with dollar CAD or dollar Swiss, it's more I'm just sitting out because I don't want to be involved. But like I said, I would lean more towards going long on this market. So something possibly just like this would make sense. But again, we've just had low CPI, so the dollar might depreciate further from here. Ball out. You didn't give me any winning trades, buddy. Actually, I will have you know, gold is back at entry almost. So you've actually not paid for anything just yet. If you give me some crazy call, then maybe I'll give you a free membership. Give me a signal to take my signals. Euro dollar. Okay. So I'm just looking for a complete, sorry, I'm looking for a pullback to then start going long on pound dollar and euro dollar. So I don't really have a reason to go short anymore. We had the news of German fiscal stimulus. So that was a great driver. We've also had the hawkish ECB, also a great driver. We've got a very bearish dollar at the moment. We've actually got euro dollar on the edge finder popping up bullish. Let me show you that. Give me a second. Here. So yeah, again, it's pretty much all blue. The only thing is seasonality, which I don't care too much about seasonality, especially in G10 currencies and PMI, but that all services, but that's it. So everything else is still looking very positive. The central banks are positive for this market in terms of bullish. So yeah, I think if we can find somewhere to go long, that's fine. I'll quite happily take a long position, but right now it's just a little bit too high. Gold choppy, it is indeed. Ball out, it's free for 7 days and it's $100. James provides good value. I appreciate it, Bashi. Thought money was no object to heli pilot. Who's a heli pilot? James, what do you think about JPY from the COT data? It seems extremely bought. Is it a good thing? Yeah, I'm still bullish on the yen. The problem is it's just a little bit overbought, I would say, at the moment. So it's not really had much of a pullback recently. I'll just put this onto area here. So it's not had much downside. We've had a few pullbacks, but nothing too major. So it would be very normal for this market to have some further downside, but that wouldn't break my idea of being long on yen. So first target I've got is at 71.05. But again, the problem is that I've had is quite a few people have taken taken the yen long idea, and they've tried to put it onto day trades and sort of scalps, and it's worked here and there, but people aren't accounting for sort of the timeline I've got for yen longs. I've said it before, I'll say it again. It's sort of a 12 to 18 month play. It's not something I'm looking to just take next week or this week and get out of. It's a long-term position. Scared James will hit me. Why would I hit you? What's going on? Do I day or swing trade? I do both, Pombo. CAD rate cut in 2 minutes. Mohammed, I wouldn't expect much. Rate hikes, rate cuts, rate holds are normally priced in. Unless there is something interesting in the meeting, then likely it'll be pretty muted. $300? No, that was a bug. I had that on the website, which actually is completely my fault. I didn't realize it was saying $300 a month. So no one joined for like 3 weeks, and I was like, oh, that's a bit strange. Need to up the marketing. And then someone messaged me this morning saying, I can't afford $300. I was like, we don't sell anything for $300. I realized I kind of messed up though. So James, the number coming, the news coming out for CAD, you want to see have any effect? Not unless we get something out of expectation. Yeah, look at that. Bashi being the testimonial. Sweet. Okay. Like I said, I apologize. I might be a bit quieter on this one. I'm exhausted. I've got like no energy, so I'm sort of taking it slow today. London Scam is a good song. Is that the guy that that got arrested because of his carpet on TikTok? I heard about that. That's quite funny. Getting bullish scores in XXX JPY grids, it doesn't matter. Like I said, it's 12 to 18 months play. The edge finder will flip flop around in between that time. I'm looking at long-term central bank policies, not immediate data releases. What's the difference between CPI and PPI? It's the way they're calculated and what they mean. Bashi, at this point, you're gonna look like a paid agent or something. Too many drinks, hanky panky. I really wish ball out. I was busy doing I don't even know if it's worth talking about, but I was doing banking and credit stuff. So I was sat on call with my consultant, and we were going through getting elite traders listed on Experian and TransUnion, trying to get Amex, all that sort of fun stuff. But I don't have a US address. So they all want utility bills or leases and all that sort of useless stuff, and I can't provide it. So yeah, you're gonna have to make a trip to the US and have a word with them in person. Like, do you know who I am? I am Forex James. Give me a bank account, please. Sorry, I'm getting a bit sidetracked here. You know, Alex, we actually don't have any affiliates. We do have the option, but no, we don't have any. Planning bank heist before dipping the UK. I wish. I'm on the straight and narrow. Probably a bit too straight and narrow, actually. I'm looking to short oil. I'm in a oil short actually, and it's looking a bit bleak. Oh, actually, it's coming back slightly. So I took this on my stream yesterday, and I did a very, very silly thing in hindsight. So what I did was, at this point, I put a tweet out saying, "You're welcome," to anyone that followed the stream and took the trade. And then as soon as I tweeted it, it reversed, and now it's almost a stop loss. So that's my fault. I think I jinxed myself on this one, but I still like oil shorts. I think it's a great idea. It's just a case of sort of letting it run. Maybe I'll have to enter a couple of times before I actually get the move. But yeah, I'm not concerned with the direction. It's more just the position itself. I just need to fine tune a little bit. If we start seeing rejections here, I might just scale in again. I also took a short on euro pound actually. I didn't call this as a signal. This was just a personal trade. But I'm just looking for a DCA, sorry, not a DCA. I'm looking for a mean reversion back somewhere. Could be anywhere. I'm not too bothered really. I'm just going to take profits when I see some sort of pullback, possibly down at the 50% level. If we see price come down to, yeah, so in between the 50% and 618, then I might look to take profits on that one. But it's just small, just test the waters. We've got, I think it's Credit Agricole and London Stock Exchange, and is it HSBC? One or two of those is correct, but we've got institutions currently short euro pound. So just sort of following their footsteps. Bias in euro dollar. I would look to buy euro dollar, but wait for a pullback. The DAX. I was also looking to buy the DAX. It's on the watch list. The problem is, although we had positive news in terms of sentiment with the German fiscal spending, there was also pushback from that by the Green Party, from what I remember. I don't have it in front of me, but it was I think the bill was pushed back or something, which was, it's quite significant actually, because a lot of the strength that was driven into the euro was due to that. And the same thing with the DAX. We saw quite a large rise in the DAX and then it kind of reversed. But it seems just because the market sentiment is pretty risk off at the minute, I think we're going to see a lot of the indices down, US 30, NASDAQ, Dow, DAX. So I will look to buy the DAX at some point, but I think right now might not be the right time. So I'm looking potentially down here. There's not really too much of a reason for that one, I don't think. No, there's not. It's more just a previous low. But yeah, I'm not too focused on them just yet. I'm more focused on G10s. And then when we start seeing some positive data for the US in terms of the S&P, then I might start paying attention again. But at the moment, it seems like a falling knife. I'm 2 positions deep into EG shorts. Well, good luck is what I'll say. Like I said, I took a very small position, so if it doesn't work out, that's fine. But I'm going to sound like a broken record, but I say all the time the euro pound is really, really good for mean reversions. But those periods where you're stacking the short positions up to continue the sell, it can be very rough because those moves can be quite aggressive and unforgiving if you are over leveraged. Self-subordination, bought oil, very nice. Alex hit TP yesterday, well done, Alex. Car and LSE, okay, that's it. A bottle of cooking oil, all right, I see. With the price of cooking oil these days, you might as well just buy an actual bottle of oil. Oh, sorry, barrel of oil. Time to sell pound yen, Swiss yen. I would like to say so. And it doesn't look bad. I mean, technically, this still looks like a pretty supportive level. If we look on the daily here, technically, it looks fine. Fundamentally, I would also say it's fine. It's just a matter of how far is the yen going to pull back until we start seeing some strength come back in. James, how can you get the data institutional trade ideas like Euro Pound publishing trade ideas? It's not, we do send it out to members. Obviously, we send out bank reports. We also send out the data for things like that as well. EF gold drops to 3 points only. Yeah, we'll see. How's egg USD position? I really wish I was in eggs. I had someone message me the other day asking if I thought an international egg company would be good. And I was saying that on the surface, it sounds like a pretty good idea, but when you get into all the costs of, safely transporting eggs, keeping them cool, distribution, you're actually probably not going to make very much. Cool. Okay. Sweet. So dollar yen is something I was looking at. I don't know if I covered dollar yen or not, but I will do it again. Dollar yen seems great. I'm just waiting to see some sort of confirmation. So we came into a really nice fib level here on the day, on the H4, along with a very sort of bread and butter break and retest, and it's still the worst or the most bearish reading on the edge finder down here with a score of -9. We just had low CPI or low CPI data. So I really like dollar yen shorts. I'm just waiting possibly just for this candle to close. Actually, if we can get this H1 candle to close in 6 minutes, I might take a short position down to 140. So I'm just going to keep an eye on that one because I might execute that one on stream. Take on Bitcoin. I have no take on Bitcoin, Mohammed. Sorry. I don't touch it, don't look at it, don't care about it. I can go over the chart on Bitcoin soon, though, if you want. I just want to wait to see what this candle does. So I'll have a look at the chart in the meantime. Euro Swiss is bullish. I would look for long positions on pullbacks The euro is doing very well off the back of a hawkish ECB and optimism around Germany, and the Swiss isn't doing much, to be quite honest with you. They're also expected to cut rates for the rest of this year. Australian dollar yen. Yeah, I was looking at Australian dollar yen as well as dollar yen. So I was also paying attention to this. But the problem is with this one, it broke above the fib. So actually, if we can close back below, that would also be fine. But it's the same idea, really. Australian dollar yen and US dollar yen, I'm quite happy to go short on both. I think I'm a little bit more in favor of the dollar, but the only concern I've got is it's just very extended. Are we due for some sort of pullback here? It's possible. I'm bearish on the dollar for sort of the medium term in the next couple of months. I don't think we're really going to see much in terms of dollar strength. So I think it would be a good play to go short dollar yen. It's just a case of not trying to sell the dollar right before it has a pullback. Why is US 30 going down and NAS going up? Because they're different things. They're both US indexes, but they are made up of different things. So NAS is tech, US 30 isn't tech. So it really, depends on what's going on in those individual markets. Although they obviously, like I said, they're both US markets, it doesn't mean that they have to behave exactly the same. So if you look at the Dow and compare it to the S&P or the NAS, it generally does move differently. Pound Swiss, okay. How long have we got here? 3 minutes. I still like the pound Swiss narrative. This one really annoyed me, actually. I was long pound Swiss and I cut it at, it wasn't even 1%. I think I cut it about 0.5% because I placed the trade. Where did I place it? Around, I think it was here. I think I placed it roughly around here. I can't remember exactly right now, but it was essentially just moving sideways. I also had Euro Swiss open at the same time, and Euro Swiss was doing quite well. So I just wanted to reduce that Swiss exposure and sort of just trim down the portfolio a bit. So I cut pound Swiss, and as soon as I cut it, it rocketed to the upside. So I'm really frustrated about this one, but the idea is still intact. Again, I'm pretty bearish on the Swiss. I think the pound is definitely holding its ground. It's quite stable. We've also got sticky inflation in the UK, so it's sort of holding off the rate cut idea. So no issue going long on this one. Bashi, it's all good and well saying give it a chance, but when you're managing a portfolio and you've also got people following that portfolio, you've got to be sometimes overly cautious. And in this case, maybe a little bit overly cautious, but I'd rather be overly cautious than make stupid moves and risk other people's capital. Yeah, I really like this. I think I'm going to go for it. Or do we go Australian dollar yen? They're both bearish. US dollar yen's got a -9. Australian dollar yen's got -8. However, I think the landscape for the dollar is a little bit worse, in my opinion. What about CAD Swiss? I'm not sure about CAD Swiss, I'll be honest. So the situation I've got with CAD Swiss is that we've got the Canada is currently in a tariff war with the US. Now, sure, back and forth, whatever, but I don't see Canada coming out of this trade war in any type of good position. They can try, they can throw tariffs back on the US, but I don't think that's actually going to really do much for their economy. I think they're still going to get a bit of a hit. And again, I'm bearish on the Swiss, so I just don't have a directional bias on CAD Swiss, to be honest. Thoughts on short-term shorts, Australian dollar, US dollar. I'm long on Aussie dollar actually here. So if you, I'm not sure about shorts. The reason I'm long is because obviously, like I said, I'm pretty bearish on the dollar at the moment. This is pretty much the only dollar cross or major dollar cross that hasn't rallied. So if you look at pound dollar, euro dollar, they both rallied. Australian dollar hasn't. Obviously, Australian dollar is weaker, but I think there's still room to the upside potentially. I mean, we've had such a huge downside since September. So it's been what 4 months of just essentially downside. I think there's a lot of room to be corrected, as well as the dollar being pretty weak at the moment. So I do still stay in the idea of being long, but I could be a little bit early. I don't know. So if you want to go short, but I just don't really see a solid reason to at the moment. Tariffs will push Canada into recession, 100% housing market crash and decline as well. Yeah, I watched, I can't remember the channel name, but there's a channel and he talks about different economies. And I watched one he did about Canada. And it's not economics in terms of what we do. It's more like just how people are living and what it's like to be there. And it seems awful. It seems really, really difficult for normal people. It seems a little bit worse in the UK, actually, which is surprising. Yeah, I did see China put tariffs on Canada. I haven't really seen anything about that, though. I saw a headline and that was about it. So I should probably do a bit more research into it. But it doesn't seem to be much of a market mover right now. Okay, right. I need to get back to dollar yen because I'm going to go short. Yeah, I'm going short dollar yen. Where's MetaTrader gone? Here it is. Okay. Give me a second. Let me just concentrate for a minute here. Oh no, my position tool's not working. Why is that? Okay, whatever. We're gonna have to. I'm gonna have to just go. How many pips is this? 225. Okay, fine. Let's just throw. We'll do 1.5 lots, and we'll just wing it. I can always reduce it if needed. So that's fine. No problem though. Slight over risk, but that's okay. So we're going for a 1 to 3. Sorry guys, I'm just thinking out loud. Let me just sort this out. Okay, sweet. Back on track. Done. Sorry, I needed to send that to Discord as well as actually placing the trade. So don't take that if you're not confident. If you're not in the same idea I have, manage your own risk. Don't trade it. Don't take it. Do your own research. All that jabba jabba. It's not financial advice. It's terrible. I live here in Vancouver, and our second BRD condo cost us $750K, and that was cheap. However, homelessness is skyrocketing because rents are about $2,800 a month. $2,800 for a month. That's kind of crazy. Although, yeah, I'd say it's slightly more expensive than London, actually. By the way, guys, I am on a quest to get to 5,000 subscribers by the end of the year. I'm about halfway there already. So if anyone could go to my YouTube and subscribe, it would mean a lot to me. I appreciate it. I do live streams and stuff as well on my channel. I normally go live before the A1 channel, then I end before they go live, then I come on here. So if you like me, I appreciate it. You think I bought? I don't think I bought. Oh, I did buy. Oops. Thank you. Appreciate it. Let me get rid of that. Pretty much break even. That's cool. I'm about 1% drawdown at the moment, which is not very nice. See, that's what happens. I was a bit too focused on talking and not focused enough on taking the trade. So yeah, that's what it is. See, at least someone's got my back in the chat. I just asked ChatGPT for to take a trade. Why would you do that? I did a video, actually, I did a 2-part video thing on my channel, giving ChatGPT money to trade with. And it did really well in the first video, and in the second video, it lost all of it. I think ChatGPT probably could trade, actually, in theory, if you could get a prompt right and you could give it the right context. So, for example, if you said, look at the monetary policy in this country, in that country, look at labor markets, look at inflation, come up with a conclusion, and then give it an image of the chart, and you could probably get somewhere. But I don't think AI is quite ready to be doing that yet. Sammy, I'm a noob. My bad, Sammy. I'm sorry I'm not to your standards yet. Maybe one day I can get there. I can hope and pray. Mohammed saved me. Yeah, maybe he did. You have to do a video on DeepSeek. I don't know if I want to use DeepSeek. I've not touched it yet, but I don't know. Maybe I've been propaganded into thinking it's bad. Izzy, I appreciate that. Thank you. Do you trade German 40? Sometimes, not very often. I was looking to enter here off 200 moving average, support, pretty basic setup. The problem is it was very, very similar to the S&P when I was telling people that it was a very, it was too obvious to buy. So if you looked at the S&P here, this level, even I was very, very tempted to buy. And I was just thinking it's one of those situations where the fundamentals don't really line up for a long position right now, and the technicals look very, very good for longs. So it's like if it's too obvious, it's very likely you're going to get liquidated. So I did avoid that. But the point is, the DAX is a very, very similar point on the H4. So I wouldn't be surprised if we do see further downside from here. And I don't sell really the indices. I only buy them unless there is some very specific reason like COVID or something. But as a general rule, I only ever look to buy. So I'll be keeping my eye out for some sort of potential bottom, but I don't think that's coming just yet. DeepSeek is done, not in the same level as ChatGPT. You know what? I pay for ChatGPT, and it's so useful. It's essentially just my personal assistant these days. My channel name is just Forex James. Just type it in on YouTube, it'll come up. Yeah, ChatGPT is a good way to learn trading as well, actually. So, for example, if you heard Nick talking about bonds or inflation, you could chuck it into ChatGPT and say, you know, what does this mean, or simplify this, or put it into bullet points, and you can start to get a grasp of it. Obviously, complex things it's not very good at, but if it's general knowledge, and you just need it simplifying. It does it quite well. The thing is, okay, the last thing I'm going to say about the AI thing is, theoretically, there's no reason it can't. I mean, there's the guy, was it Prop Firm Kid that did it? I'm not sure if it was the Prop Firm Kid, so don't quote me on that. But I think it was either him or someone similar to him did the chicken thing where they got a chicken to pass a prop firm. And there's another guy I saw do it with a dog. And it just goes to show that statistically, or maybe statistically is not the right word, or theoretically, anyone or anything can be profitable, at least for a short period of time. Can you check gold? I'm not sure I want to check gold. It was an entry before. It's still doing nothing, actually. So gold is very range bound at the moment. So we've gone from range, drop down to 200 moving average, slight pullback. Now it's still stuck in a range, testing the previous lows of the previous range, or the lows from the previous range. So technically there isn't anything here, unless you want to do what I did and buy sort of the support of this range or the bottom. I'm still bullish on gold. I don't really have a reason to not be. But yeah, it's more a case of just waiting for it to do something, to just do anything. Even if it stops me out, at least it does something. I'd rather get stopped out of a trade than it just moves sideways. Euro dollar. Yeah, so euro dollar is not really doing anything. We just need to see. Yeah, I just need to see a pullback, because I'm bullish on euro dollar in general, but I can't justify buying at this current level. I need to see some sort of downside before I look to actually execute. I learned PMI, CPI, NFP all through ChatGPT. Yeah, I think a lot of people learn things through ChatGPT these days. I know, most students are using ChatGPT to help with their work and courses and projects and things. So I don't see why not. As long as the information is not overly complex and it's relatively public, I think it can be quite good assistance. I learned a lot about business structure and things through ChatGPT. DeepSeek not able for identify chart for free. Okay, so you need to pay for DeepSeek. Interesting. Okay, silver has really annoyed me. So I was looking to go long on silver. I called this in my Sunday watch list video. I was looking for this 50% pullback, and it happened at 10 p.m. so market close. So unfortunately I missed it, but it happened almost perfectly down to 200 moving average fib. It couldn't have been a more obvious trade in terms of the technicals. But yeah, sadly didn't get in it, so I'm a little bit salty about silver, but yeah, there's nothing I can do about it now. So it's just a case of waiting for another pullback to go in. How do we get onto AI? I don't know, actually. I'm not sure how we started that conversation. Pombo, that's exactly it. I think generally, as long as you know where to look, you can learn anything. I mean, like, trading is a good example, actually. You can learn a lot about trading if you're in the right community and you're watching the right channels and talking to the right people. But obviously it's very easy to get sidetracked onto get a Lamborghini in a week trading Forex. We've just discussed gold. In fact, we've discussed gold a couple of times, so feel free to rewind it a minute or two. Anyway, my time is coming to an end here. Again, I do apologize. It's been a bit more of a boring segment from me this time, but I just don't have the energy to be a bit more active. So let me just check. So you've got Chris Pulver coming on in the next minute or two. and then I shall be gone. GBP USD pullback. I would love to see a pound dollar pullback, but I just don't have one yet. So yeah, pound dollar, euro dollar, I will be looking for the long positions on a 50% pullback, but at the moment there isn't one. There's not really a great deal happening right now. Dollar Swiss is currently at 50% as well, which I don't mind, but I'm not willing to go in on dollar. I'm already short dollar. So I'm short dollar on Australian dollar, US dollar long, and now US dollar yen shorts. So quite happy to sit out of that one for now. Euro Swiss, again, as I said earlier, I think is still a great long, is still a great long position. It's just a case of waiting for the next pullback. Hello, brother. Why is this looking like you are new trading and you are master in only demo trading? Am I a master in demo trading and new to trading? That's news to me. But it's okay, Preet. Don't worry. I know you don't very likely not understand what's going on here, so it's okay. If you're used to seeing the FVGs, liquidity sweeps, and all that stuff, then I could understand how this might be a bit overwhelming for your small mind, but that's fine. I love people like that, because what you can normally gauge when people behave like that is they're sat at their computer, more than likely pretty fat, sweaty, on a Wednesday evening or afternoon, putting hate into a live stream about someone that has no idea who you are. It's pretty pathetic, to be honest, but it actually kind of makes me smile. Remember, hate doesn't come from above, only below. All good, all good. Anyway, like I said, Chris will be on in a couple of minutes, so I'll hang out with you guys for a little bit longer, and then I shall be off. Just trying to think, is there anything else to cover? I don't think there is. Oil is very likely to get stopped out today, actually, so I'm just going to hang on to it, let it run. I also am in natural gas, which also isn't doing very well, so my portfolio is looking a little bit messy right now. However, I'm completely fine with the positions. It's all relatively low risk, so I'm not too concerned. We just took dollar yen as well, so I need to add that one. So I'm pretty heavy on the positions, but yeah, it's all fine. You think he's a fan? I wouldn't count on it, but it's all good. Like I said, I don't want to associate with people that behave like that. Cool. Okay, right. The dollar, I would say, is actually pretty likely to have some sort of pullback here. So it's at the election level when Trump first came in. So you can see, actually, it's just filled this gap. So yeah, we are likely to see some upside actually here from the dollar. It wouldn't be a shock at all, but I wouldn't expect that to be a trend change. I would be more expecting it to pull back and then continue to the downside. It seems like the optimism around the US is pretty abysmal actually right now. Okay, guys, I just got the message that Chris is here to take over the show, so don't leave when I do. Cool. So, guys, have a great one. I will see you. I'll see you tomorrow. I appreciate you being here. Looking at the wrong camera. Don't get margin called. I'll see you all soon.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Tuesday. Happy Wednesday, actually. CPI data came out this morning. It was slightly better, which wasn't a huge surprise. We were tracking this since last week, and we saw a pretty decent flush from the recent highs in this would be December, January, and then flushing back down all the way to the September lows. So, Trueflation is a third-party reading, and they're way the heck down here towards 1.32. It's going to be an interesting next couple of months, like looking at CPI, PPI, core PCE to see if there are improvements. You take a look at your edge finder inflation data, and we'll see that the trend is actually pausing or even going lower. So for the first time in, I believe, 5 months. So here's your year over year. So forecasted, you've got finally the nudge to the downside. So what's been trending up for 1, 2, 3, 4, 5 months has now finally broken slightly. Now it's not, celebratory levels, but the fact that it's trended lower and it was actually a forecast for a slightly lower print than previous. So your month over month CPI, this is year over year CPI core. So you're excluding food and energy here. The previous print was 3.3. This month's forecast was 3.2, came in 3.1. So that is hopefully seen as a bit of a positive. Okay. The month over month CPI core, previous was 0.4, forecasted 0.3, came in 0.2. That's a positive. Your month over month headline CPI, previous is 0.5, forecasted now 0.3, came in 0.2. That's good. And then your headline CPI year over year, previous 3.0, forecasted 2.9, came in 2.8. So this reading overall is pretty positive, which is not a bad thing. Now, I think price action ultimately is going to determine whether or not this is a way to carve out lows and see the market relieve a little bit of the pain and stress that it's caused the last 3-4 weeks. I think this is pretty simple. Looking at the Mag 7 today is up around 3, or semiconductors up around 3% today. Yeah, 3.3%. Mags is up like close to 2. Not MAGA. Ugh. Mags is up around 2%. Just we had the close yesterday, up around 2.6%, still holding that gap slightly. This would be an important one to watch. If the mags can close back above the 200 moving average, I wouldn't be surprised if this is just another kind of swing. I think the easiest trade right now to look at, if there's any hopes of a pullback, would be we just have to look to carve out these lows. Okay, so all I did was took a Fibonacci swing from high to low, and that was based on yesterday's low. So we did poke lows yesterday and then rip off those lows a little bit. So I've got a 613 high and a 552 low. So percentage-wise, that is your 10% correction. In fact, it's like right at 10% or pretty close to it. So right at that level, right around that 10% correction, like almost scary, like to the decimal point, we're pretty much at a 10% correction. So if that's a technical spot, the market's interested in saying, okay, good enough, it's a correction. Maybe that is a spot to build off a low. That's why I put a fib on here. So a high to low and a 23% pullback is very shallow, but very attainable. A 30% pullback is a GAN level, but oftentimes what I'll see with a GAN level is the price will be tested. And that's a really key spot to see if the market's going to come back and retest the low. Okay, I don't necessarily want to be short there, because if that GAN retracement level fails, then we're talking back into the 382 or back into the 50 pullback zones. And if you look left on this chart also, this structure right here, previous low, little choppiness around this area, little indecision right there, gap during the election, okay? That's where I see price as a potential pullback. So this whole conversation I've had about de-risking and getting out of some crappy positions, or in the short term, looking at some bullishness, all of it qualifies. If I'm doing short-term bullishness, my profit target is going to be somewhere in here. right? My de-risking is if price comes back into this area, whether the broad market responds and correlates, really nicely. If the indexes pull back into this zone, I want to trim some of that exposure. Make sense? Okay. So that's where I'm at. But for right now, price is pretty calm on the day. I do have a broke wing butterfly in at 55.25, which is just below yesterday's low. I'm going to see if price will just kind of stay here for the day. Give me 50 cents on that broke wing butterfly. I've got another trade in for $2.50, and I'm just trying to pull out 50 cents of credit and see if this market just stays relatively calm for the first like 60 to 90 minutes of trading. So right now my I'm close. I've got a 250 credit trading for about $2.25, $2.30. I just need a little bit more time, hopefully, in the trade. And then my broken wing is going to be something I'll manage towards the end of the day, but I'm looking to see if price just stays away from yesterday's low. That would be nice. I am watching the futures market pretty closely this morning. It's an interesting mix. Let me get this out of the way. The S&P, and this isn't like perfect, but I looked at the 830 candle as a potential range. And, I probably need to make more of the adjustment out in 30 because, ES is broken a little bit lower, but NASDAQ has not. So it's almost as if, NASDAQ's up around 1.18%, S&P is only up about 0.4%. So I think it's because NASDAQ took the hit a little bit harder. We were down like 13+% on the NASDAQ, right? So same thing applies on QQQ. Take a swing, high to low, and your correction should be around 13%. Yep, 13.7% from high to low. So that's about a 541 all the way down to 466 or 467. And again, look at your simple levels. 23% level, 30%, 38%. I mean, that's a very shallow window for price to pull back. As far as if looking left, this area offers some decent structure around that 490 to 495, or a really nice spot would be pulling back towards like the 50% zone, which is back in here. So again, de-risking would be if price is coming back into this level conservatively, de-risking or taking some near-term profits. If we pull back a little bit more, de-risking and taking some profits. So anywhere between about 490 and 510, but a 20-point window on the QQQ. I would get out of trouble. If you've got some overexposure in tech, I would just try to do some work and get out of trouble. Okay, so I just did that actually. BGP was asking, can I just apply the same logic? Yep, and that's exactly what I'm doing. So that's what I'm watching for. We just want to see if the market is capable of carving out some lows, not making fresh lows. A gap higher today certainly helps, but don't be shocked if the market ends up trying to fill this gap, but doesn't take out the lows, and then it uses that as a rally point. So just watching technicals, you want to get into the nitty gritty of all these levels. I mean, go down to your smaller time frame. Okay. And if price is going to pull back into this close at all, if this is just like a slow move, you could look for a trend line break, see if price wants to break and go higher. There's a monster gap up here to get filled, and just know your fib numbers. So you can do this on a smaller time frame. Smaller time frame. Take your fib from the high, go all the way down to the low. And this is not perfect, right? Like this may not be like the exact high or low, but I mean, within reason, I think this would make sense that there's my 30%, there's my 38%, there's my 50%, and just watch and see how price behaves. Because if we look at for short-term trading, look at the asymmetry here. If I was buying it right here and I put a stop loss below the lows, okay, I have a 1-to-1. This would be around the 30% pullback zone. That's about a 1-to-1, maybe slightly in favor of the push to the 30%. But if we get to a 38%, okay, we get to a 50%. Now you're offering, if this is my risk, if we can get through this level, this is offering more reward than risk. This is offering more reward than risk, and so is this. So your bigger win to be protecting profits would be once you hit that kind of asymmetry. Once you hit that surplus of reward to risk, then you're in good shape. But the important thing is, can you find that trade? And sure, just hit my take profit on SPX. Excellent. That was a nice little winner. I'll take that. So that's trade 1 on the day. Trade update. Trade 1. Trade 2. $2.50 credit, $2 debit, closed for $2 debit. Okay, so taking the winner right there, not bad. Good. All right, does that make sense? So whether you're looking at the Qs or you're looking at the SPY, same logic applies. I think this is a pretty good opportunity to look for at least a near-term bottom. Some trades that I'm in the trades that I'm posting, I'm looking for this pullback. So on the SPY, this was pretty inexpensive. It wasn't awesomely priced, but I did a 556 by 566 bull call spread for $5.75. So what that means is that's my max risk. But I bought this in the money, and right now it's trading. I should have maybe $1 of profit on this trade running right now. But I'm looking to see, this is out to the 321 expiration and the 328 expiration. So I want to see if there's any recovery here, if I can get a few bucks out of this trade. So right now, let's go SPY. And here is my March 21st. So my 555 by 65. And this is going to be I'm just going to call this a bull call combo. So bull call combo. So the 555 by 65. Actually, let me separate these even more. I'll go ungroup and just do 2 of these. So bull call spread and a bull call spread. So this one I paid 570. This one I paid 570. And I just need to see if price will get, intrinsic value wise, I mean, we're trading around 557. So real value on the trade, I have around $2.50 of value on this one. And I have about $1.60 value on this one. But that's not until I actually have expiration. So right now, if price were to stay where it is right now, I'm still making money on the trade, which isn't the worst thing. Actually, you know what? That's not true at all. Sorry, I thought I was taking the trade at 550, but no. So 555 plus my debit. So my break even is going to be around 560. For me to have profit on this trade, I got to see price around 560 and around 561. So if I'm in for 575 and I've got a $10 separated spread, then $10 is going to be my max profit. So for a 575 debit, I can make $4.25 max profit, which isn't bad. It's not bad. I mean, return-wise on that would be 4.25 out of a 575 debit. That's a 74% return on risk. So not awful. But let's see what price gives us. Okay, right now we are starting to see the ES futures feed is still pushing below that 830 candle. NQ is starting to break. I'm going to see if this is a fake out. We're just past that opening bell range. So watching some key levels here today on SPX. Hopefully market makers are going to defend. Hopefully market makers will be defending this 55.50 area, or just defending the close from yesterday if it bounces around. Okay. Are we going to retest? The question I'm asking you is, are we going to retest this low? Hopefully not. That's another, 300 points lower. I mean, anything can happen. We've obviously had some huge daily swings these last 3-4 weeks of trading. If I were to go short futures, if there's a breakout there coming, but I'd probably stay out of it. So I think this could be a pullback into this range. But if we're going to short, I mean, the stop loss would be pretty tight. If I short it here, I want to see stop loss. And I'd probably trade MNQ versus NQ. I would just want to do micro contracts here. But I'm not going to take the bait unless I see a confirmed breakout. Okay, 19446. That's a daily pivot. Gotcha. Yeah, I can see that. So we're sitting at the weekly VWAP right now. I just want to see a more convincing breakout. This is my 830 candle right here. That candle, that candle. So ES is slightly below that. NQ is right at it. So, all right. Let's go a little bit more top down. I'll come back and revisit futures. I'll keep my fibs on the Qs. I'm watching SPX on the morning. I'm going to set a chart alarm down here at 55.25. And that is a Baroque Wing Butterfly pin price. Hopefully we're not going too much lower than that. Today's high is around 56.41. So that would be a move lower by about 117 points. Now, that's very possible. We've had some pretty big flushes. If you look at these high to lows intraday, I did see, I think it was Monday was like a 200 plus point day. Monday was a nasty day. So Monday we had the intraday pricing going down about 140 points, but the gap lower on top of that was about a 206 point move. So it did end up snapping back like I think 50, 60 points. But from previous days closed down to 207 to then a close around 160, it's like that was a pretty big intraday swing. So I'll just keep an eye on it. All right. So there's where we're at. Let's go VIX. We're starting to see the volatility index retreat a little bit. Not a ton. This isn't just getting smashed to the downside like we'd love to see, similar to what we have here. I mean, when the VIX has these big days, it's followed by monster red days. So up a ton and then very quick, reversion. We're not quite there. Like this is still, I don't know. I mean, is this like a slow grind? But we're talking about levels that we really haven't seen in a while. I mean, this was a one day VIX was like December 18th was Fed day when the market took a huge crap. But that one day spike was met by all-time highs again like a week later, or not all-time highs, but a retest of that entire FOMC level. But that was like the largest single day spike after August 5th, which was the largest single day spike in like 30 years. This has been a very persistent VIX. Okay, look at this level. I'm just going to note current price around, let's go 25.97. The last time we were this high outside of our outliers of December 18th and August 5th, we're talking about a correction coming in the end of March and early April of 2023. We're talking about a end of October 2022 and bear market territory in all of 2022, which for 9 months was a legitimate correction. So I mean, we're hitting levels that usually mean much more trouble ahead. But all of these were what was down in the market, pulled back. Okay, what was down in the market again, pulled back, down in the market again, pulled back. That was all of 2022. Currently, this little persistent slide has led to just one big correction. All we had was about a one-day pause in here, but this was a pretty much flush for 10% in the S&P, about 13 to 14% in the NASDAQ. And if there's any bounce, that's what I'm looking at in the short term. Okay, but it's probably not going to be easy. Pay close attention. All right, so keep an eye on that chart alarm is set. Let's keep moving through some other items. Yesterday, I was looking at SPXY for a potential buy opportunity. I still like this trade. But what I discovered is if I wanted to own shares of SCXY, even in a margin account, even in a portfolio margin account, it is not treated with portfolio margin. It's treated like it's cash. So that's what I didn't love about this. And if something were to happen where this is going to go through my August 5th low, I'm probably going to get in more trouble than what I want. So I'm just going to stay out of it for now. I do like this instrument. But I've got to be a lot more confident that we are putting in some lows and we're going to start carving out some higher highs. And right now, I'm just not there. I think this market going down for this first little leg, I think this market going down, trying to carve out a low, offering a little bit of relief, this is where the bulls and bears are going to have to fight it out. Okay, I saw that this morning Goldman Sachs adjusted its end of year target from 6,500 down to 6,200, which is just above the highs. And I mean, I take that with a massive grain of salt because Goldman Sachs is terrible at forecasting. But I would say that most expectations are if this market gets back to the highs by the end of the year, I'm sure there's going to be some happy investors out there just to show that they withstood the pain. If you kind of dollar cost your average way through it, you can survive it and still maybe carve out a couple of gains this year. But anyway, just a revision downward, and I'm curious how many other kind of analysts and expectations are adjusting as well. We did start the year off around 5,900, so that's not a huge gain, right? If we go up 300 points on the year for a $5,000 instrument, not a huge gain. But it would certainly be better, like if we're down, 10%, that we can carve out a way to get back to like 11, 12, 13% to the upside and at least, finish positive on the year. So we'll see how it plays out. All right, VIX. Like I said, not retreating a ton. And I think the hardest thing would be if VIX continues to stay persistent and consistent. That would not be a good thing. I still think a correction is due in the near term, but if we see more pain to the downside and we see a higher VIX, I mean, it's just a bigger deleveraging. It's a bigger correction. I'm looking at JNK, which continues to make some fresh lows. If you look at LQD, was it LQD IW something? It was some comparison, but LQD heading lower, but JNK is kind of my primary gauge of if we're seeing widening credit spreads, that's AAAs, triple Bs, triple Cs, you got to keep a close eye on this JNK. This thing has been dropping over the last, 2 weeks or so. Last 2 weeks of trading. I'd like to see this thing stabilize. If we are going to see this break some recent lows and start to head lower, this is more concerning. Like this means wider bid-ask prices. This means what's going to feel like less liquidity in the markets, and that's probably not great. So again, a lot of things to watch. VIX is one of them. JNK is another one, and obviously just your typical price action. All right, let's go dollar. Dollar. It is what it is. I'm not interested in the dollar at all. If you want a dollar cost average into this, I don't think this is a bad spot because we have such an inefficient fall here. If you're willing to trade the dollar small enough, which I don't love this trade, but if you were to go dollar strength here and try to get a little pullback, I would say dollar strength to like just look at this entire area. Okay. If you went trade 1, trade 2, and trade 3, all you're doing is you're leveling into support. Okay. Now, do I think this trade is too early? It feels like it. I don't love this because why would we turn at 103.59? I have no idea. So I don't really love this trade, but if we came back into this initial breakout point where we had back in September, October's, like this was a little bear trap, and then we had that October breakout, this entry I think would be pretty good. So you start there and then have a reserve entry and see if this market is actually going to pull back. So I will say this, if I'm going to trade anything on the dollar, it is probably here. Look to see if I get some type of efficiency play around the 102 to 102.50 handle. So that'd be trade number 1, and then reserve a second position for the lows. And that would be 2 small trades. Look to see if I can spot a bullish pattern off these lows and then try to pull back into this candle. Right? So what there's 2 ways this happens. Either one is this continues to flush lower, all right, and I get the trade that I want, or 2 is this pulls back into this area in the near term, and that becomes another opportunity to then look to short the dollar. Right? Like this to me is where this market would be finding some efficiencies and pullbacks. This is a big one-sided move. So a pullback here that hits some resistance would be a good opportunity to look to short again. And then take it down into this level. Right? So there's a couple ways to look at it. If you get a brief pullback, that's fine, but I'd like to short that move. If we just continue to fall and flush lower, then I'm looking at this area to buy, trade 1, this area to buy, trade 2, and then see if this market wants to build a position, form a low or form a bullish pattern, and then work its way back up into these candles. And that, to me, position-wise on Forex would be a pretty good trade. Okay, oil, 67. I think there's, that potential bounce in oil, but let me take a look at this one. If this is reasonable, current price in oil futures, how far out would I go? Maybe into May. So if I split the difference, I can do a 1-for-1, spend $250 to make $250 if price is above $67. That's on CL. So if there is a bounce here, it's a fair trade. It's risk reward. My concern is that this floor just doesn't hold. It's been tested so many times since 2023. This is early 2023. I could see a bounce. Makes sense technically. But if it breaks, I just see us sliding into 60 or 55, and it's a silly trade. So I don't feel like calling the low. So I'm just going to stay out of it. But if anybody's like crazy short term, that might not be a bad spot. UNG at $22. My sell side of this is 23. So I'll be watching that one closely. Gold, not a lot of activity here the last 4 or 5 days on gold, but still maintains a bid. I still like buying dips if we get them, 2,800. I'd said on gold, because of this stretch away move to the 200 moving average, if we make a high in gold, I'm not going to call the top, but I wouldn't be surprised if this high is divergence where price momentum disagree and that we actually put in some type of topping pattern on gold. That wouldn't surprise me. So just be careful of a bit of a bull trap to the upside on gold. I think if we hit that round number that everyone's been talking about, 3,000, that is just going to continue to kind of prove my theory of the stretch away move that we have, plus the bar count we have. I could see a top forming in gold, at least putting in some type of corrective pattern. All the more reason, which is why I'm waiting patiently to kind of buy and scoop up some dips. Silver is actually doing pretty well. Silver has been outperforming gold in the last couple of weeks. So daily candle wise, let's go weekly candles. Weekly candles for the last 2 weeks, we've had silver looking better than gold. And I'm good with that. So we are almost at some recent intermediate highs around $33.45. I still have a trade on SLV that's looking pretty good, 28 by 27s. I got a diagonal spread out here as well. This one's got to be up some profit. Yeah, this one should be up a decent amount. Let me check on SLV. So SLV up about $2,000. I've got shares, which are up. I have my shares covered at 35, and then I have my diagonal spread, which is a $15 by $34. I bought the $15, sold the 34. And that debit, let me go back into this trade here. So I've got the 15 by 34 is a diagonal spread. So I bought the 15, sold the 34, cost me $13.89, and the max profit here would be 19. So that's if I get it called away. Otherwise, I just keep rolling. This is out to January of 2027. So I'm going out pretty far on silver. I want to give myself a nice long window. And if it gets called away, I'd be making some fresh highs. If SLV is trading at 34, that is hitting my, symmetry target or very close to it. So I'm trying to see if this will appreciate and go, through my symmetry target, taking some profit or as much as I can out of that trade. Okay. Today, not loving this retreat post CPI. So, and I said this in a Telegram video yesterday. My concern is if the market doesn't take CPI data with a positive inflection, that there's just, these bears are just not done swinging. They're still going to claw away, but I'd like to see the market try to step in and, kind of ease the pain a little bit. So day is not done, but still, like this little 830 candle breaking to the downside, we've essentially faded everything and we're now in red, right? S&P is flat from the gaps higher. So let's go SPY. I guess it's easier to see this. So this is where we closed yesterday. That's where we opened today. Closed yesterday, opened today. The market just faded that gap. Now, question is, does the market respond to that? If the market responds to that with a green, that's good because that means we're just going gap higher, fill the gap, and then see if the bulls can step in and try to take it from there. But a flush lower is, like I said, like CPI data should be fairly well received because it's the first time in 4 or 5 prints that the market's actually showing better inflation data. But who knows? I just think, like I said, the bears keep swinging. Okay. But if it responds off that low, that'd be nice. All right, let's keep going away here. We did VIX, we did gold, we did silver. Bitcoin at 81.5. Just get ready for some chop. A risk-on rally in the stock market could hopefully help solidify this previous resistance around 74. I think if traders right now see this level continue to be defended, just building. As long as we don't do too much structural damage to that 74 to 70,000 handle, I think a trade into this like 105 to 110 retest would be, timing wise in the near term, that would be a great trade. If you can trade LIFO, as in last in first out, that would be an excellent trade. Or obviously just buy your Bitcoin. But if you're trading this in chunks, in tranches, I like a LIFO trade here where it's like I could take another swing at IBIT, whatever, buy a couple hundred shares and see it go from a 75 to 105. Like that's a good chunk. And then IBIT would move hopefully from like 46 into like 56 area. Try to revisit those highs. But like I said, as long as we don't invalidate this kind of 70K, I'd say even if we overshoot it, I don't really want to see price go too much lower than about 70K. And I say that because this candle through the election was an inefficient candle about 70K. The previous resistance right around 74K. So I could see this area being tested, maybe a fake out, and if it closes back above, that looks pretty good to kind of build that position back up. Okay, IBIT just hanging out. 52 by 51. Let me check on something really quickly here. That's out to May. All right, I think this trade's okay. Out to May. I've got the 41 by 40. This is only out 16 days. These are all negative. Not by much, but come on. So I still have a collar trade. This is my collar trade right here. Fit 62 by 43 collar trade. And then some longer term credit spreads. All right, so the most pressing one would be my put put. So this is a little, I mean, my style of trading is a 1-1-1-1, which is I bought the 43, I sold the 42, sold the 41, sold the 40. On that trade, I collected, I think, $66 of income. Yep, $67 of income on the trade. There's a profit trap of an extra $1. The assignment risk would be I'd own IBIT at $41 and $40 if price was going to fall that much lower. So far, like I said, what's price doing? Filling today's gap and responding. So far, that's a pretty good sign. I'd like to see it stay there. I don't want to see necessarily price break the lows. Okay, MSTR trading around 255. Just gonna let this one hang out, see if this 240 level holds. Keep a close eye on this one. This one is if we get a near-term rally, I think Bitcoin would be benefiting from a risk-on rally. We're trading at 188. Potentially, I would take on some short-term assignment of Coinbase, which shouldn't be too terribly difficult to repair. So if I get assigned at 190, I take a $5 bonus profit on top of that because of the 205 by 200. So I'd own this at 190 minus the $7. 188.93 would be my break even, as I just illustrated here. So could I own this at 188.93? Well, that's about current price. If I put in a 2 to 4 week covered call on Coinbase, if I were to go out, let's say 2 weeks or so, anywhere between like 11 to 16 days, that would be worth, and at the money would be around a $12 or $13 covered call. That's pretty easy to repair. If price just stayed where it is and I collected $13 or $14 on it, then, for 100 shares, I make, $1,300. There might be a bit more value if I went a little bit deeper. So I'll see if I take the assignment near the 28, then I'll assess. But hopefully price isn't going to, drop too much lower than where it currently is. Okay. Yeah, we'll see. Futures market is just not responding very favorably. We had the CPI news, we're breaking lower. We're going to see. We did make a slightly higher high with the gap, but price action is going to be really key today. If we take out the low, I would hope we don't close below that low. That could be a little manipulation play, like threaten again. Everyone's going to get all, I don't know, nervous again. That's right around that 10% correction again on the S&P. So just keeping a close eye on this. We have a gap fill responding, but price is just not going up, not yet. So if we wipe a lot of that away, that is market makers were looking at about a 60-point move today. And right now they've already moved about 74 points. So if we get down to fresh lows from the high, that would be fresh lows. That'd be about a 112-point move. That's almost a, 1.5 to 2, double the expected move. It's been happening a lot the last couple of weeks, but time will tell. So I'm just going to hang in there and see what happens. All right, we're good on coin. Let's go some other markets. Copper just freaking ripping to fresh highs, not all-time highs, but fresh highs. My copper position is around $160 max profit, and right now showing about $112 profit. So I've got some of the profit locked in, about 64% available. I'm not going to take it yet. This is plenty out of the way. So my copper trade is, I'm trading at like a 5 delta. The odds of this thing being a problem are slim. So I'm just going to collect the full income on that trade most likely. That trade is out to April 24th. Japanese yen futures retreating. I took profit on this one already. What I'm going to wait for on Japanese yen futures is hopefully a new contract series added. So if I go /6J, the only expiration I have right now is September 5th. If I want to go longer term, that's my expiration. This was my hesitation the first time I took the trade in January, which was I'm going to get long a Japanese yen futures, but I don't love it because I can only go out to September. So what I'm waiting for is, can I get more expirations? I want to be, I do want to be longer term Japanese yen long. And to me, the best way to trade it is futures or FXY as opposed to currencies, because I don't want the negative swap. But what I'm looking for is, can this thing go from is it a bullish pattern that's in the works? Right? I mean, honestly, this looks a lot like the dollar yen in reverse. If I flip this over to a dollar yen position, does that not look like the dollar yen? So we broke the low, broke the low. If this is a swing trade in the works, I mean, that to me is a good looking trade. Finding a lower high, swing above, and then see if this thing wants to push towards some type of symmetry. Revisit the August lows. You go Japanese yen futures, flip it upside down. Take out the high. If this sets up some type of swing in here, I look to see if that can go higher. But like I said, if my only expiration is out to September, I don't love that trade. But anyway, we'll see. This is why I remain long on FXY. This was the July low to August 5th top. And if there's more to come, then I will run with my break evens. I own FXY around $58. So it's not a huge mover, but I do have like 1,000 shares of this. So if it gets back up from 58 to 66 or so, I don't have anything covered. I'm just letting it run. So that's another kind of bit of a hedge play for this year. DXJ DAX is stabilizing a little bit. I'm still looking for some pullbacks on DAX because of the stretch away move above the 200. FEZ, I'm just selling some premium. This is another way to play the Euro stock. This is the German, essentially German DAX. FTSE retreating pretty hard off these highs. Europe looks a little better than the UK. Germany looks a little bit better than the UK. So I would stay out of this one for right now. Argentina, not going to touch it. China still hanging out above September highs. Brazil, that's fine. Mags is fading back down a little bit. Apple hitting some fresh lows. I have an expiration for next Friday at 2:05. I don't think I'm going to have to take assignment there. If I did, the assignment price would be 2:05, but I would own it break even at 200 minus the $1.09, about 198.90. 198.90 would be my break even. Would I own the shares of Apple? I would, but I wouldn't want to own it for very long. So I'd own it here about 23, 24% off from the recent highs if I needed to, and I would just try to repair it. Just try to repair it. Amazon, fading. AVGO, just above the earnings highs, fading. Google, hanging in there, but still like leaking lower. Meta, don't be surprised if we come back and find this 200 moving average. Microsoft, leaking a little bit lower. We're at 379. I've got to take a look at this one here. So I'm going to go Microsoft. Microsoft. So right now, this trade is maxed around 120 and currently trading around 109 bucks. Now, the nice thing about this trade is I do have a potential bonus trap here where I can keep my $1.20 on the trade. This one's probably worth it. I don't really want to tie up the buying power here. If price were to come less than 375 this week, then I would take on the assignment, which I don't want. This is close to it's close to good. Now, what you can see here is I have a 385 by 380, and that is a bear put spread that is currently up around 220 bucks. And on top of that, that's offsetting my 375, which is my line in the sand for Friday's expiration. So if I wanted to get greedy, which I don't think this is the time to do it, if I wanted to get greedy, I could hold out and see if price stays above 375, then I have the possibility of keeping $1.20 on the trade on top of a $5 profit trap. So it is possible that I can make $6.20 on this trade if price is greater than 375, but also less than 380. Now that's a really tight window to say I got it. So I'm gonna look at it this way. I think I'm just gonna close out the trade, avoid the assignment risk, not really worry about it. And then I've got another one here that's even lower and let that one kind of work into next week. So I'm gonna see what I can close this one down for. Shows 5-cent debit. Let's see if I can close it out for 5 to 10 cents debit. Let's go 10 cents debit just above the mid price. No problem. So took that trade off. This one's fine out to next week. This one for the 14th, a 111. And close this one down for, see if I can get out of here for 5 cents debit. 7. Sweet. 5 cents debit, even better. Very nice. So I'm going to close down Microsoft. This one doesn't have any exposure. Just have some shares. Here we go. 1, 2, 3. Group this as a 111. 1, 2, 3. Hopefully close this for a 5-cent debit. Fill the 5 cents. Good. And no exposure. Okay. So closing out that for about $120 win. I do have some other trades running for next week, Friday on Microsoft. So this trade closed out for a little winner. Next week, it is the similar setup. It's a 380 by 375 by 370. So my line in the sand is if price is above 370, but below 375, that's my kind of ideal trade. If it stays where it is right now, then I have maybe like a 50-cent to $1 profit trap on top of the credit for $2.40. So this one is still important to watch for next week. It might be best to manage this one over the weekend or early into next week's trading as well as we get closer to expiration. Right, this one I just managed is only 2 days out, so I'm in that like tiny little sliver of just the final stretch. And then the other one's out to April for an income trade, the same level, 370. So, all right, I'll take that win on Microsoft. Let's keep going. Netflix, still expecting Netflix to head lower to find this 200 moving average. We have a long bar count. Meta actually, I mean, this might be a, let me see here. Meta, anything can happen, but short term, Meta to this Friday or next Friday. Let me see. How many dollars away are we from current price? So this would be a move towards, it's a 5.8% move, 610. Let me see what this looks like. If I were to do a, we're trading around 610. If I buy the 615, sell the 605, that is not a bad trade. So current price. Yeah, so I'm basically buying. Is this the right timing though? Let me, I might have to go out a little bit farther. So March 21st, if I buy the 615, cost me $460 to make $540. That's not a bad trade. Cost me $6 to make $800. Not a bad trade. If this gets down to this like 585 level, 575 level, that's the direction I'm looking at. Can we get down to this low? Can we find this 200 moving average? Honestly, I like the trade. I'm just I think I'm late on it. The better trade was when this thing went. I don't know if anybody saw this headline, but Meta's up 20 days in a row. That was a perfect reason to short this thing, which is what I did. So now it's like, I like the setup, but that little butterfly trade and bear call spread and bear put spread, like that's been fine. Targeting this 200 moving average. I think now I'm getting greedy to like go after that final little stretch. So, and the reason why I don't want to jump in and like chase that little bit is because if all we had was red candle, green candle, and this thing pulls back a little bit, I'd rather short it on a pullback. Otherwise, if it flushes down, finds the 200, that's fine. There might be even a short-term bounce from it. So I'll show some discipline and hang out. Microsoft, this one I just closed out for a profit. This one's still running. This one's still running. Put in my allocation around 416 bucks. Just a little buy. This one closed out for 5-cent debit. So took $1.15 profit on that one per contract. I'm happy with that. That way there's no assignment risk. And then next week, it's even $5 lower at 370. So I'll keep a close eye on that one. Netflix. This one might be okay. Earnings on this one out to April. Netflix. Could I get a similar setup on Netflix? This one has a bit more space. I'm going to see if Netflix will pull back into this. Like, I'm going to get picky here, but I'm going to pull back to like this 948 level. So if Netflix, if this is a flush lower, pulls back here, still flushes down, like that's understandable. I might miss the trade. But if we have a level here and price can just kind of grind its way back to it, I might look at another opportunity to be short Netflix. Just to get into this 200 moving average. This one's looking good for next week, Friday. This is a 655 level. Unlikely going to get hit. That'd be $2.56 income coming into next week. NVIDIA was up to 116, fading a little bit. We're still hanging in around that like 110, 115 handle. I'm watching that one closely. This one on NVIDIA, I do have a ratio spread. I don't mind taking on some shares of NVIDIA. If it stays where it is, this is out to April, so I'm really not worried about the timing of this one. But the idea here is if it stays, let's say we just hang out, we stay around this like 110 handle. Well, this trade is pretty perfect because I pulled in $2.26. Okay, right there, 226. And if it's around 110 towards expiration, then at 115, that's fine. That's no bonus trap. But 114 is an extra $1, 113 is an extra $1, 112 is an extra $1. So anywhere between like, 115, 114 is an extra $1, 113 is an extra $2, 112 is an extra $3, 111 is an extra $4. So on top of this $2.26, I could potentially have a bonus trap on top of that. If we're greater than 110, cool. If we're greater than 115, fine. I'll just keep the income. But we'll see what NVIDIA does, and there's still some time in that trade. Okay, Pfizer. Where's Pfizer at? Pfizer at 25. Geez, wasn't this at like 27? The fuck? What the Funyun? Geez, man, Pfizer, you freaking turd. Like this stock can't do anything right. Give me a squeeze. I bought, this is out to like next summer, but man, I bought a freaking June of 2026 $20 call. I paid $7 for it, and I'm selling something for a $10 position. So it's like, can we just get above $27? I mean, if I looked at this stock, it's lower beta. Okay. In fact, it's like not even correlated with the S&P. So that's good. It has a 6+% dividend, which is fine. But my gosh, like this stock sitting down, I don't know, 60%. And coming back to levels that this stock hasn't seen since 2012. It's like, are we coming back to great financial crisis levels on Pfizer? I mean, we're through COVID levels. That's why I thought it's a pretty good spot to be buying. If we're at COVID levels, it's a pretty good spot to be getting into it. So I'm hoping that this stock is going to start figuring out how to stop sucking and work its way back up into what you can see me drawing a fib level. Just looking at a high to low. I mean, just give me something. Shallow pullback is $32. Okay. 30% is a $34. It's like, give me something. And I want that to be, a nice little trade. So last year, Pfizer, I don't know, I did like maybe 20 grand on Pfizer last year. It was pretty simple, and price didn't even move a bunch. So I'm hoping we get a little bit more of a squeeze going into like this year. I can take this obviously out to summer of next year, but man, it's crazy what the stock like can't get out of its own way for a couple of dollar movement. So that trade on Pfizer, PFE. So there's my 20 by 30. So I'm down about $900, but my break even is $26.99, and I'll keep an eye on this. I'm looking for levels at like $32 to $34. If it gets called away for a $6.99 debit, gets called away for $10, I make $3.01 on 10 contracts. So I'd make $3 grand times 11 accounts. So it pays well, but give me some movement, would you? All right, Tesla 241, everyone's favorite. I just saw this really ridiculous revision on Tesla from JP Morgan saying that the stock's going to go to $800. I mean, believe me, I love it. So what I'm watching for on Tesla right now is this trade is out to next week. So we got up to around 251 today. That assignment price would be 255. So we'll see. We'll see if we kind of turn the corner here for the next week or so. If I have to take on assignment, I'm willing to take on assignment. But it'd be nice not to, because I have other income trades out to April and May. But we'll see. So it's not a hard one to repair. Again, you can probably get $20+ for a covered call. Tesla's premiums are pretty high at a 84, 85 IV rank. So if I go into Tesla. Oops, that's TLT. Tesla. There we go. So March 21st, I have the 265 by 260 by 255. If price is greater than 255, that would be excellent, because that would be a potential bonus trap. 28th, similar. Bonus trap. April 17th. May 16th. Okay. Like, this stock's not done getting beat up yet. But I did sell, premium on this one out to next January, 190 by 160. I think we're going to stay above 190. I also have some short-term shares. So anyway, near expiration is here. 1, 2, 3. If it gets back to 255, then I avoid the assignment risk. But I'm trying to get $2.17 of income on top of a potential profit trap. But price needs to rally. So chart alarm is set at 255. We'll see if we get there. Berkshire pulling back a little bit. This one also, it's not that huge. I was going to say it's not a huge bar count. It's noticeable though. It's 342 bars. That is the same as the S&P. Berkshire might, I don't know. It might be a good top, to be honest. Probably not a good sign if it is. If Berkshire's sitting on, 20% of assets in cash, collecting about 4 to 4.3%, I don't want to call the top. It's clearly divergent from the S&P, right? Like this new all-time high on Berkshire compared to the 10% flush we've seen in the S&P. I still think it needs to find a 200 moving average though. All right, TLT, just going to stay in this one longer term. I've got this one at my sell side is 92. I saw the 30-year mortgage came out today a little bit lower. 6.63 is the new revised 30-year mortgage. So we've dipped from 704 down to 663. Hopefully there's more downside left. Watching the 10-year. 10-year is still sticky around that 4.3%. So, this would be a great spot to break and go lower if possible. But if the stock market has any relief rally, we're probably going to see this thing stay pretty sticky around that 4.29. We have Fed next week on Wednesday. Just something to put in the calendar. Watching J&K to make sure we don't just break and fall off a cliff. China stock is hanging in there. Alibaba not really doing much. I mean, it obviously did plenty this year already. This has been a great performing stock. I'm happy that I closed out the shares. Now it's just a bunch of income trades and options. Baidu is hanging in there. I'm just selling colored calls really. FXI. If we get a pullback, I might trade some FXI again. KWeb, JD's at 39.87. I've got a covered call at 40 out to next Friday. I think I rolled it out there through earnings. Let me double check that here. Pfizer, JD. April. Yeah, I might do some roll on Coca-Cola. JD's right here. 500 shares covered at 40. And I've collected about 60% of that covered call. It's going to let it decay more. I don't mind this one getting called away. This one should be good for about $2,000. Let me check my break even is like $35. So get it called away. 500 shares at roughly $5 a share. $2,500 would be pretty good for a little repair. Okay, SCHD. That's Schwab dividend. Holy shnikes. Well, this one looks a little bit more attractive to buy and hold. Dollar cost averaging. That's a crazy dump on Schwab dividend. Wow. You talk about a ridiculous turn here. I mean, percentage-wise, it doesn't look like a lot, but that is a 5% dump on Schwab dividend. I don't know what stock led the way there. Stock investors go on defensive dividends. Well, it's not going up. Yep. So everyone is going to a lower beta and defensive dividend plays. It's not a surprise to see that rotation. So I don't know. It's just going to be back. It's going to be a back and forth year. I think this year is going to be a grind fest. And I think I'll let you go for today. So I'll wrap it up there. Any other charts questions? Let's go back to intraday. So here's SPX just below today or yesterday's close. We're just below that, just kind of hanging out. Hopefully market makers will continue to defend in here. Maybe just, I mean, if we have a high of the day, low of the day, we finish in the middle, that would be acceptable in my world. I would like to avoid a fresh low if possible, just to see if these markets can stop the bleeding a little bit. Okay. All right. I'll let you go. See you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.